the swaps that we have done. The system liquidity deficit tapered, therefore, during last 2 months of February and March, and further it turned into a surplus on 29th March 2025. Further, coupled with the government spending picking up pace during the latter half of last month, March, the system liquidity further improved and it stood at a surplus of 1.5 lakh crore as on 7th April 2025, and even yesterday it was 1.4 lakh crore rupees of surplus. Reflecting these developments, the weighted average call rate softened and remained near the repo rate since the last policy meeting. The spreads of 3-month CP and 3-month CD rates over the 91-day Treasury bill rate have also softened since the second half of March, suggesting an improvement in liquidity conditions. I would like to mention over here again, I am reiterating this, I have said this earlier, which is that the Reserve Bank is committed to provide sufficient system liquidity. We will continue to monitor the evolving liquidity and financial market conditions and proactively take appropriate measures to ensure that there is adequate liquidity in the system. Coming to financial stability, well, I do not have much to add from my previous policy statement in February. Things are more or less looking similar. The financial soundness parameters of the banking sector continue to be robust. The liquidity buffer in the banking system is well above the regulatory threshold. Profitability indicators are also healthy, reflecting robust operational efficiency of the system. Similarly, the system level parameters of NBFCs too are very sound. Now, as has been the practice, I shall be announcing some additional measures. This time I have 6 additional measures to announce to all of you, and these relate to banking regulation, fintech, and payment systems. First, we propose to enable securitization of stressed assets through market-based mechanism. There is already a mechanism of securitization of standard assets. The same is now proposed to extend with modification to stressed assets, and I may add that this is in addition and this is not in lieu of the existing ARC route under the SARFAESI Act of 2002. Second, we have guidelines on co-lending. They are presently applicable only to arrangements between banks and NBFCs. Moreover, they are restricted to priority sector loans. To exploit the huge potential of such lending arrangements, it is proposed now to extend these to all regulated entities and to all loans, priority sector or even outside the priority sector. Third, loans against the collateral of gold jewelry and ornaments, commonly known as gold loans, are extended by regulated entities, both banks and NBFCs, for both consumption and income generation purposes, in order to harmonize guidelines across various types of regulated entities to the extent possible, keeping in view their differential risk-bearing capabilities. We shall issue comprehensive regulations on prudential norms as well as conduct-related aspects for such loans. Fourth, to harmonize the regulations governing non-fund-based facilities across regulated entities, we propose to issue comprehensive guidelines. Instructions related to partial credit enhancement by regulated entities are also proposed to be revised. This is also, if you would recall, a budget announcement relating to NABFID by the Honorable Finance Minister in her budget speech for this year. This is expected to broaden funding sources for infrastructure financing. The draft of these 4 guidelines and regulations are being published today itself for public consultation, and we shall finalize these guidelines based on the feedback received. The other 2 announcements relate to, first of all, enabling NPCI to decide in consultation with the banks and other stakeholders the transaction limits in UPI for person to merchant transactions. This limit, as you are aware, today is 2 lakh rupees. We will give the freedom to NPCI in consultation with other stakeholders to revise it as per the needs of the economy. I may also clarify over here that the P2P transaction limit, which is 1 lakh rupees as of now, will remain the same, and there is no change with regard to the regulations in regard to P2P or person-to-person payment transaction limits. The other and the last measure that I have to announce today is regarding the regulatory sandbox. We are making it theme neutral and on tap. At present, there are actually 4 themes on which people and businesses can work on this sandbox. Now we are making it theme neutral and on tap. Necessary directions for the implementation of these 2 measures shall be issued separately. To conclude, the global economy is going through a period of exceptional uncertainties. The extract signal from a noisy and uncertain environment poses challenges for policy making. Nevertheless, monetary policy can play a anchor in ensuring that the economy remains on an even keel. In our context, as I mentioned earlier, the domestic growth inflation trajectory demands monetary policy to be growth supportive, watchful on the inflation front. We are aiming for a non-inflationary growth that is built on the foundations of an improved demand and supply response and sustained macroeconomic balance. As before, we shall remain agile and decisive in our response and put in place policies that are clear, consistent, credible, and in the best interest of the economy. Thank you, Namaskar, and Jai Hind.
All right, to the point, succinct and clear. That's what we're coming to expect from Governor Malhotra's policies, the second in a row. Rate cut as expected, 25 basis point. Stance changed as was being expected from neutral to accommodative. All in all, what struck me, Neeraj, is that he's very clear that we're going to steady the ship and sees GDP hit at about 20 basis points from all the madness going around.
Only, which is a good thing. So growth forecast change, which was very necessary. Inflation forecast change, again necessary. And the stance change. So does all of this signal that more easing it on its way? Instead of doing a 35 or a 50, less than 25, stance change, signal more easing on its way, maybe another 2 on the way in the subsequent policies. In light of all that's happening, it's a pretty it's a policy outcome that most people will be happy with.
I think we can go out and say it. It's a good policy.
Yes.
Because he also makes the point to say that an accommodative stance means that there are only 2 options primarily that the Reserve Bank is looking at, which is status quo or a rate cut.
Yeah.
So he's, if you read between the lines, he's baking that in. That commentary is very clear. Katrina L joining in now, our first speaker for this afternoon, this morning as we break down the policy. Director, Economic Research, Moody's Analytics, joining us. We'll of course have more voices coming in just a bit, but Katrina, good morning to you. Your first take, a lot was being expected from this policy in light of all of the global turmoil. Do you think that this fits the bill of what is required from an Indian perspective right now?
Oh, definitely. I think that they really delivered where was needed to be. I mean, first up, a big tick by the fact that they actually did reduce the policy rate by 25 basis points. That was widely expected and they delivered on that. And the fact that they have changed the stance to accommodative means that there is more easing coming this year. Our baseline view at this stage remains that we will see cumulative easing of 75 basis points over 2025, but the door is certainly open to actually get even more easing than that, depending on how conditions go. And I think the Reserve Bank of India came out very clearly with their view that we are willing to provide support to India's economy through this extremely turbulent time that is happening in markets at the moment by the tariff threats that are being lobbed around.
Katrina, did you feel that most of the decisions that have come in have been on expected lines. I mean, maybe some people were, the rates people were going with a change in stance as a given. That has happened. The only thing that's probably not happened is that the RBI governor, to some people, has not done a brave move. But maybe in these times that is not warranted, which is to do more than a 25 basis point.
Yeah, I think you've hit it right on the head there. I think no more surprises in this kind of environment are very much welcome. And so the fact that the Reserve Bank of India very much stuck to script in terms of meeting expectations right across the board in terms of inflation forecast adjustments, stance, and that final cut as well. I think it was all a positive thing, because the last thing the RBI wants to be doing at this point is introducing even more volatility into markets. And we've seen over the past week, with extreme movements in equity markets, bonds and currencies, that we just don't want even more of that uncertainty. Because one thing that is more difficult to capture, but an incredibly negative and pervasive impact on economies, is this highly uncertain and volatile environment that we're living in. So the fact that the RBI kept to script was certainly a positive thing in this circumstance.
Just a quick look at what markets are doing in the interim. There has been some recovery in the Nifty. It's a very narrow range, to be honest. But Nifty hanging in there around the 22,400 mark. Nifty IT is seeing no relief at all, about 3% down. But I want to pull up some of the gold loan companies, so to speak. Let's look at a Muthoot. Let's look at a Manappuram and pull in their charts as well, because Muthoot actually taking it on the chin. You see that big sharp drop there. That's as soon as the governor talked about new provisions coming in for gold loans for NBFCs as well. So we should look at that NBFCs and infra funding companies and the kind of impact there. But even as we come to that, let me welcome Madhvi Arora into the conversation, lead economist, MK Global Financial Services. Madhvi, we've just been talking about how, in that sense, what the governor has said is ticked all boxes. I know there were some very optimistic talk about front-loading a rate cut with a 35 basis point, etc. But the room has been left open for more, isn't it?
Yes, very much. The fact that they have changed their stance to accommodative essentially has implied that, if it really becomes a difficult situation on the global environment, there will be a policy response, either in the form of, comfortable liquidity or in the form of, monetary policy action as and when required. So one thing is very clear: we are in for a very uncertain period, and policy responses, would probably face a massive push and pull factor also, especially for emerging markets, right? Because, there will be shock to sentiment, there will be capital outflows, which will probably require higher risk premia for emerging markets, including India. And policymakers will also have to keep that in mind, while managing their domestic dynamics. But definitely at this point in time, the bias is pretty much towards a easier monetary policy, which also includes non-conventional easing tools, apart from just the conventional easing ones.
Okay, point well noted. Do we have Vishy? Then we should try and go across to Vishy very quickly. Vishy, you heard the whole policy as a VF. You've read the statement as well. What has stood out?
What has stood out is this statement about global growth or global tariff conditions impeding domestic growth. That was something that stood out clearly, and this change in stance, of course, from neutral to accommodative, and the RBI governor clarifying to most people in the market that this is indicative that either the RBI or the MPC is going to go ahead and cut rates further, or maintain status quo depending on whatever the situation is. What is also interesting is the GDP growth revision for FY26, or the expectations being revised for FY26 being brought down to 6.5%. At 6.7, RBI was still fairly optimistic compared to everybody else in the market. So the 6.7 to 6.5% reduction is something that you need to watch very closely, because the commentary is very clear that there is likely to be impact on domestic growth. However, he is sounding confident, the RBI governor is sounding confident as far as India's fundamental growth story goes. We are fundamentally strong. The current account deficit is likely to remain within manageable levels, and therefore impact as such is not going to be material, but there is some impact, and that's something that is sort of an acknowledgement from the RBI governor.
All right, Vishy, Thanks for that. So, well, global growth and the RBI weighing in on that, but with all of that put into perspective, still saying that probably India is slightly better placed. Katrina, come in on that as well. Does the confidence of the RBI, 20 basis points cut in growth, not dramatic at all, and the change in stance as well as showing that the RBI is putting up its hand and saying that we will do what it takes, but it may not necessarily take a whole lot relative to what some of the other economies might need?
Yeah, I think that's certainly a fair point, because I mean, if we look at India's exposure to global trade and specifically to US markets, if we're looking at economies across Asia, India is certainly right down the list in terms of its vulnerability. I mean, exports, for instance, they only account for about 10-11% of GDP, and then only about 17% of India's exports actually head to the US. So it's nowhere near the kind of figures that we see when we're looking at, say, Southeast Asia, which is so much more heavily weighted towards export exposure, and particularly to US and Chinese markets as well. So that's a positive. And so it does kind of go back to the view that policymakers in India don't need to do as much to try and effectively insulate their economies from the ructions overseas as what other economies do. So that's certainly a positive that policymakers can take away from this.
You know, in terms of the inflation outlook, Madhvi, I want to come to you on this. The inflation outlook actually quite robust, but is that something which will be a bit of a wait and watch situation? If you listen closely to what Governor has said, he's curtailed the economic impact on GDP to 20 basis points, and inflation will come less, and emphasize the differential in tariffs. But we don't really know how all of this will play out, isn't it?
Correct. So, yeah, I agree. Though it may be too early to consider actual forecast changes to the extent of massive downgrades. But to state the obvious, there are a clear risks to even a 6.5% growth forecast that the Reserve Bank has given at this point in time. This also will emanate from a much higher risk of a global recession if these tariffs are maintained globally. Now, at the same time, you would also see a massive disinflationary impulse for Indian industry, which could emanate from lower global commodity prices and also supply guts of goods. So I think while my co-panelists talked about Asia being much more hit than India, I agree that India is less exposed to the global markets versus emerging Asia. But India will unlikely to be a non-synced player in the EM Asia cyclical downturn that we will see. Historically, India has never directionally outperformed emerging markets. They've also gone hand in hand with emerging market Asians specifically. At the same time, China's survival response to these massive tariff blows will really matter for India. Especially given that China is sitting with excess industrial capacity, and there's a risk of dumping in the world, and specifically to its Asian trade partners. And we'll also have to watch out for FX as a counter tool, which would possibly be used by China because things are really getting very pushy for them. It will also have implications for India, Asia across. So there could be some inflationary pressure that could come from the depreciation of the rupee. But net-net, I think the disinflationary impulse would be much higher owing to what is happening in the world dynamics, both from commodities point of view and from the global growth point of view. I think even the 4% inflation that they're now targeting could also have a downside risk.
Okay, Anubhati Sahai, Head of South Asia Economics Research at Standard Chartered Bank, also joins in, as does Jayesh Mehta, Vice Chairman and CEO of DSP Finance. And thanks so much, both of you, for joining in the conversation as well. Jayesh, as per expectations, or did you expect some deviation from what the RBI has done in light of the fact that the US debt and the US paper is not quite behaving like how US paper would? It is as volatile as EM debt generally is.
No, that's very true, and that would happen till people, whoever wants to negotiates with US. I think till that time, there will be the way US paper would behave would be like any other emerging market. But at the same time, coming to our policy, I think it's really, I think people do not realize what he has said, and he also clarified people were interpreting stance more with liquidity and all that. He's gone back to, the earlier days, pre-2013, where he made it very clear that what he means by accommodative, neutral, and tighter stance. So I think that's a very big difference. So that's, I think, going forward, I think it's just right now because of global volatility. But people, if this were global volatility situation was not there, this policy would have got very huge thumbs up situation. From the market.
Acha, from the market, yeah, because right now in the studio, we gave it a thumbs up. All the people that have come out have given it a thumbs up as well thus far. So, yeah, but the point well taken for the market.
From the market.
From the market, yeah. Point well taken. Anupati, do you give a thumbs up to the policy?
Absolutely. I think, this whole disassociation of the monetary policy stance between repo rate and liquidity was extremely, good move. In uncertain times, my key takeaway from this policy decision is that in uncertain times, you cannot expect the best of the outcome, and you will have to live somewhere in between. And that's what the governor did. He has clearly indicated that he wants more rate cuts going forward. And he knows that when rates are cut, it will be passed on to the consumers because you have this external benchmarking system. But potentially there can be episodes where it has not been transmitted to the money market if liquidity is not in ample surplus. But probably he has decided to live with partial transmission rather than having nothing in order to support growth. So extremely, a very, very wise policy decision in my view.
The question though is if this policy required a little more to be done, and I'm posing that question with a little bit of trepidation. I'm coming to you first, Anubhuti, on it. Simply because if there is a fire going on, how many buckets of water do you need? and yes, this is what the doctor ordered maybe even 3 weeks ago, but right now, and I'm just coming off the reaction we're seeing both from bond and equity markets. Was more required? Could more have been done? Should more have been done?
Very interesting way to pose this question, and I would answer it that how many buckets of water do you need would depend on how fast and how big the fire turns out to be. We are still in that assessing mode. Was nothing delivered in order to manage increased uncertainty, especially after the April 2nd report? I think this whole switch in accommodative stance was to address the increased size of uncertainty and to ensure and comfort the market that there is more monetary easing, which the RBI is likely to provide at least to the retail borrowers. So I think something has come forth. Could it have been a larger cut? Maybe yes, but it doesn't mean that it could have sent a wrong signal. It could have actually indicated a panic mode, which probably wouldn't have done too well for the market sentiment. So I think this policy was absolutely well balanced in terms of tone, stance, and the quantum of rate cuts. We will see more rate cuts going forward, but RBI has also retained its flexibility depending on how the current environment evolves.
I'm actually going to quickly take that question to Madhvi as well. While on the face of it, this is everything that the doctor ordered, stance has changed, rate has been cut, outlook has been determined very clearly that what the damage can be done. Is more required right now for the street to feel at least that there is some plan there?
Well, one doesn't know the extent to which this trade war could actually stretch, right? So, and I think in India, monetary policy may have to do the heavy lifting by being more countercyclical than fiscal this year. As we discussed, implication in India could not only stem from global financial market disruption, but also from real sector hit that we will face. We'll see how things pan out for emerging markets in general. I think while there is scope for negotiation, de-escalation, and market disruption could actually ease, but I think it would also be a pivotal turning point for emerging market assets, including that of India. As policymakers might also have to keep in mind that outflows in capital market could also require a much higher risk premium. And I think RBI may not want to use all its ammunition too soon, right? Given the way markets behavior is at this point in time, given the way things are extremely fluid, and it didn't make really a great sense for them to front load rate cuts in April. But at the same time, going forward, if need be, they, as I was mentioning earlier, they could go ahead with more non-conventional easing in the form of further easier regulatory lending norms. They may even touch upon things like, lowering the daily CRR average maintenance requirement by banks to sub 90%. Another round of sterilized rupee management, all of that can still happen. So, I mean, they still have policy tools in hand, and they'll obviously play along when global uncertainty sort of eases or worsens.
I just quickly want to go across to my colleague Vishwanath Nair, who's been tracking, and he's joining us from the Reserve Bank of India. Just look at what's happening with gold financing stocks, Vishy. Muthoot, Manappuram not that badly hit, but Muthoot really taking it to the chin. Give us some details, if any are available, on what the RBI could probably do. What has the governor said? Because this is clearly a reaction to the governor saying that there will be more guidelines put out, but we're not clear what, right?
Right, Tamana. So currently there are separate guidelines that deal with how banks do gold loans and NBFCs do gold loans. So now if you're going to merge them and come out with an integrated set of guidelines, typically that is code for tougher norms. Remember that the RBI has been talking about gold loans in regulated entities, which includes banks and NBFCs, and the current practices that are being employed by these lenders. And the RBI has had issue with the way that they have been doing this business, specifically dealing in cash, specifically not checking the quality of gold, also talking about hiring third-party assayers to come in and check the value of the gold. These are practices that the RBI wants lenders to avoid, and that's why a fresh set of guidelines are coming in. If you remember, last month we did report that the RBI had sought compliance reports from various lenders on the gold loan business. Specifically, the letters had to say how these banks and NBFCs have complied with the RBI's specific points that the RBI had raised on their business, and whether that compliance is in order with the RBI's existing guidelines. So now, if new guidelines are coming in, then there will be a fresh compliance exercise, and that will put some pressure on people who are dealing in gold loans. Gold loans, remember, because there has been an impact on unsecured loans, because the RBI has been tightening that as well. Gold loans have actually grown very, very fast. So there has to be some amount of checks and balances there as well. So these new guidelines hopefully will place those checks and balances.
Vishy, thanks for that. And that's the bucket that is moving post policy, because almost everything else is behaving the way as if the policy is given or has been exactly on expected lines. Now, Jayesh, what do the bond markets take home from this, in light of the fact that the world is an uncertain place, but the change of stance certainly would lead the markets to believe that if anything, there is a pause ahead, definitely not any kind of a hike, despite what the Fed might say or do?
So if you look at swap market, right, the swap market was anyway pricing 2.5 rate cut before the whole US saga started, right, tariff thing started. I think yesterday evening and even right now, people are looking at including this 3 rate cuts, right? So that's there. But as far as the bond yield or bond per se is concerned, it is also tracking what's happened to the US bond, which has gone up in last 3 days from Monday to now, right? And that will remain under stress, or it will, as you said, we started with, it will behave like a volatile emerging market till the trade things at least start getting negotiated, or maybe, again, tonight there will be an expectation that could get deferred for another month or two for most of the countries. We don't know. So I think that kind of situation will remain, but, most of the international investors, particularly central banks, would be not really aggressively buying US bonds, and therefore impacting the US yields. And that will, from a trader's mindset, though it should not really matter, but right now from a market mindset, they would look at that. So tonight, if the US yield comes off, we will see the bond yields coming off here too, very quickly.
Just a follow-up on what's happening with bond yields, and what do you think is the core concern? Because the kind of jump we've seen in the 10-year and the 30-year, Jayesh, that question for you is pointing to perhaps a bigger issue than even what we're seeing in US equity. And what will it take to stabilize this bit? What could we see in terms of movement from Washington to stabilize this bit?
I think it's a reset which is happening, right? So it's like it's not one country which has been targeted, and every country has been targeted, and there will be an expectation because a lot of U.S. deficit is funded by foreigners there, right? And anyway, if the trade is going to go down because all these guys were investing in U.S. treasuries only because they had trade surplus coming in from U.S. imports, whatever, with U.S., right? And that, if the trade surplus goes down, naturally their incremental appetite for U.S. bonds will also go down, right?
Okay. So I just want to get a view from Katrina on the same, on what is happening with U.S. bonds and what we're seeing here, the kind of turmoil coming up if this movement persists.
I think what's interesting as well is to perhaps take a step back. And I mean, at the end of the day, we don't know how long these 9th of April tariffs are going to be implemented for, and whether they are just a negotiating tactic. And I think that uncertainty is contributing to the wild swings we've seen in financial markets, including in bond markets. And I think what has become clear is that, you know, this trade war isn't just a US-China situation. This is a global, you know, thing that Trump is targeting via really aggressive tariffs on economies right across Asia. And so what that means is that we're looking at a higher inflation picture for the US. So we have upwardly revised our view for CPI for this year and next year as a consequence of that. And so that higher inflation profile is feeding through to markets as well. And that is also contributing to a much darker path for the US economy. So our view is that, you know, these 9th of April tariffs won't be implemented for a sustained period, but that is predicated on the assumption that they are somewhat of a negotiating tactic. But if they are not, and they are actually in place for a sustained period, then what our view for inflation for the US is going to be wildly different. And I think what we're seeing as well is that the Fed has a really difficult task in front of us, because, you know, if they're looking at higher inflation, that does limit their ability to try and insulate the US economy from the turbulent and negative impact that these tariffs will have on many producers, but ultimately on the consumer as well, because consumers' purchasing power will be eroded under the fact that, you know, non-discretionary goods will be a lot more expensive. And I think that that's the kind of uncertainty that we're dealing with, and that's what markets are trying to digest. But at the end of the day, we are really still at the whim of the announcements of Trump. So that uncertainty, I think, is going to be with us for quite some time yet, unfortunately.
Yep, most certainly. And pharma tariffs, major pharma tariffs coming soon was his statement this morning. So even if they are negotiating tactics for now, he's shying away from not deploying them. He's deploying them and saying, okay, come and negotiate with me. So fair point out there, Katrina. Now, Madhvi, in light of this and the fact that the tariffs have gone ahead as of 9:30 a.m. India time today, is the RBI's, are you at odds with the RBI's assessment of the growth number that they've given, or is this fair?
No, as I mentioned that, you know, that a lot of moving parts in terms of growth and inflation forecast, but I think the risk to RBI's 6.5% also looks to be on the downside at this point in time. This obviously will emanate from a much higher risk of global recession that will possibly happen as early as 6 months in case if these global tariffs are maintained. So I think to a large extent, India would not only face the uncertainty risk with regard to you know, sentiment, but also with regard to actual hit to the real sector. So I think to a large extent, I believe 6.5 looks to be also an optimistic number. But on inflation, I think pretty much on the same page as the RBI, there are push and pull factors both on inflation. But on net, I believe that the disinflationary impulse will be the dominating one, which will basically emanate from much lower global commodity prices and possibly a supply cut of goods that you know, China may dump to the rest of the world, and especially its trading partners in EM Asia. And as I said, Historically, India has, never been non-synced with emerging Asia in terms of cyclical downturns. So it's unlikely it will, outdo emerging Asia in terms of cyclical positioning.
Okay, Anubhati, would you agree with that? In that, because these are slightly unprecedented times and the tariffs rates are different, as well as how the economies are per se in terms of the quantum of exports to the US or otherwise are different, that India will be joined at the hip to emerging Asia, or could it be different if the tariffs stay for longer? I mean, final word with you, Anubhati.
Obviously, in the current environment, it is very difficult to be disjointed with rest of the world and emerging markets in general, because the theme which is driving every single country is what happens on tariff front, how long it sustains, will it cause a global recession or a US recession, will it lead to disinflationary pressure across emerging markets. So I think there will be a fair bit of association or co-movements between what happens to the emerging market at large and what happens to India. But India is definitely in a far better place because the extent of tariff imposed on India is lesser relative to, say, several ASEAN economies, and also because our exposure to US in terms of exports or goods exports is not as high as some of the other ASEAN economies. So yeah, relatively better place, but probably those advantages would play out over a slightly medium term. In the immediate term, I think India will continue to move in line with what's happening to the emerging market space at large.
And that pain seen in the markets today as well. Thank you to all of you for joining us on this conversation today as we break down the messaging coming in from the Reserve Bank of India, the policy completely fitting the bill in terms of what was expected by the street. A 25 basis point cut, yes, that has come in. Stance changed from neutral to accommodative. That is something that was also expected as well. The markets, though, going through their own level of stress, and gold loan companies in focus. I think this is important, Neeraj. Look at Muthoot Finance, now 9% down. Top loser on the street. Manappuram, interestingly, not that bad off. But the initial commentary coming in that Muthoot, as one of the largest players, has already adhered to a lot of the rules.
Yeah.
So if there are tighter norms coming in, will Muthoot be relatively better placed?
Maybe that, plus I think in Manappuram's case, the technical factor of the open offer price at 236 might be playing play as well, and which is why not as much of a downtick. But suffice to say, a good policy, Tamanna, both of us would concur on that, exactly in line with what was needed and anticipated, so no changes on that front, which is actually a good thing. Now time will tell how the markets react to this. As Jayesh Mehta said, though, that if this was a normal time, then it would have been a thumbs up from the bond markets.
Yeah, I mean, the umeed zyada hai is waqt. Is how I can say the expectations are higher. And not surprisingly, considering what is happening in the world around us, IT continuing to hurt. We'll take a very short break. We're coming back with Ask Profit, where your specific answers, your specific questions will be answered. Stay tuned for that and more.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार, इतना simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
We want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
Then when there is delivery, this stock has also been buzzing in trade. Dealers are indicating that there's a potential corporate development announcement, some acquisition announcement that the company could do when it comes to e-commerce express delivery space. So keep an eye out for delivery as well.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Mahima Vachhajani, and we'll take you through the next half an hour of trade. And the reason why this conversation is a little bit shortened today is because you probably listened to the RBI Monetary Policy Committee's decision, I should say, and it is in fact a rate cut. Mahima, 25 basis points was being baked in, and it did in fact occur. But what more? And that really is the operative part. The change of stance, I thought, from neutral to accommodative is something that gives you a sense, according to the Reserve Bank of India Governor, Mr. Malhotra, of the direction that the policy rates will take going forward. And it's an acknowledgement more than anything else that the uncertainty that's prevailing globally is ultimately likely to have a bearing on Indian economy and growth going forward. And also the fact that inflation dynamics are relatively under control at this juncture. But let's talk about where the markets are. And in the context of global uncertainty, in the context of global selling off of risk assets, 9:30 a.m. today, you had the tariffs kick in, the US tariffs kick in, and you had bond yields in the US spike even more. In the context of all of that, a 0.7% cut for the Nifty 50 is really par for the course. If anything, the cuts in the broader markets are more to the tune of what you're seeing across the globe. 1.5% for the mid-cap index, about that much, maybe a little more, 1.6% or thereabouts for the small-cap index. And really, a lot of the experts that are speaking to us and have been speaking to us, not just today, but over the course of the last couple of days, are saying, don't venture out and take too much risk. There is too much that is happening that is unpredictable, and things could shift either way. Donald Trump is talking to various countries, or at least his administration is, and there could be some conversation that is in the offing with China. And of course, we are going to be taking a break. Tomorrow is going to be a trading holiday. In the context of everything that's happening globally, don't be brave at this juncture is the view that is coming in. Let's introduce our experts. We've got Rajesh Agarwal joining in right now, and in fact, we will soon have Vaishali Parekh as well. Rajesh, very good morning to you. Let me ask the first question today, and it is in the banking space incidentally, so let me ask that. IndusInd Bank, a few people are still venturing out and thinking of bottom fishing here. would you say that that's not a very good idea considering the kind of erosion that you've seen in capital? Siju from Qatar has got this question. He's looking at a 1-year time frame. Would you venture out and buy IndusInd at this point, or would you suggest that in the context of the RBI monetary policy decision to cut interest rates and likely more cuts going forward, another bank is a better placed option?
Good morning, Alex. As far as RBI rate cut is concerned, 0.25 percentage, that's 25 basis point, was already discounted by the market. Everybody had an inkling that this is going to happen. That was it was already discounted, I would say. And the best part is the change of stance from neutral to accommodative, that is the positive one. And the inflation targets have been reduced for the first quarter to 3.6% versus 4.5%. That's another positive, and this is going to help the entire banking or NBFC space as such going forward. As far as IndusInd Bank is concerned, I think based purely on valuation parameters till now, whatever stands is, I think the valuations are very attractive. It's less than 1 to price to book and other things. But then you never know what will come out, because when things are not that good on corporate governance part, that's a difficult choice to make. What I would say personally is, if you have a good risk appetite, you can have at least 5-6% of your portfolio into IndusInd Bank, not more than that. It's small part, I would say, if you have a good risk appetite. If nothing comes out, anything more from whatever has happened, I think it can give good returns in the future. But again, with a caveat, I would say that this is a high risk counter. One should better look at investing in good corporate governance companies or the banks where the valuations are good. HDFC Bank being the best one, I would say, or even Kotak Mahindra Bank for that matter, in the private sector space. In public sector space, there are a lot of banks which are trading at attractive valuation with performance being very good. For example, Bank of Maharashtra, that has been giving good performance for the last 3-4 quarters. Or a Bank of Baroda, even a large cap one, State Bank is doing very well. So why put money into a very high risk asset unless until, of course, you are a person who is ready to take high risk. These are the counters I would recommend.
Right, got your point, Rajesh. And first caller for the day is lined up. Dheeraj is calling in from Hyderabad. Dheeraj, a very good morning to you. I believe you have a question on Senco Gold.
Yeah, good morning. This is Dheeraj from Hyderabad. My query is regarding Senco Gold.
Okay.
So I'm holding 1100 shares of Senco Gold at 368 rupees.
Right.
So can I add more at current levels?
Okay, got your query, Dheeraj. I'll go to Rajesh quickly. Rajesh, the business update came in today. According to us, the analysis was that gold has already risen 33% as compared to Q4 last year. But the growth in retail space has been around 23% only. Do you see this as a negative, or the reading for you for the business update of Senco Gold is on a positive note? And plus, what's the outlook like, of course? Should we continue to hold or add more?
Good morning, Mahima. Senco Gold, if you look at the price, it has corrected quite a lot from its tops just because of the fact there were some corporate governance issue and other things. But at this valuation, I think it's a good buy at these levels. Can move up to 15-20% in the next 6 months or so. Numbers, whatever update they have given today, I think that is satisfactory. The revenue part which you are talking about is because gold prices have risen so much that people are reluctant to buy at this point of time, unless of course they have some occasion at their family, maybe a marriage or something like that. Otherwise, people are reluctant to buy at these levels. So that's the one of the reasons I would say. But with the kind of expansion Senco is doing, basically it was a Bengal-oriented company, and then it started venturing outside Bengal also. And this company is doing good. At these levels, I think there is no high risk into this. Maximum due to market condition, it can fall by a little bit, but upside is open. So for 20% upside in the next 1 year, one can go long.
So, and by the way, even if you were to buy, Dheeraj, you may not be able to buy today unless it opens up, right? Because there are no sellers in the stock at this juncture. So bear that in mind as well. The next question is I think it's an interesting one. Suhani is joining in from Delhi. She's asking about Sterling and Wilson Solar And a lot of people actually don't know this, but very large holder of the stake in SW Solar, which is Sterling and Wilson Solar, is actually Reliance Industries. She's bought at levels of 490, which is elevated levels. She's got 300 shares odd. I think that's the other way around. She's actually bought at levels of 490, guys. We've tagged it wrong, so we have to correct that. So if that is the case, Rajesh, would you hold on if she's bought at very elevated levels, 490, or are there better places in the renewable space? Adani Green, for one, is an option with the kind of work that they're doing in Khavda.
Yeah, I agree to your Alex that Adani Green or a Tata Power are better choices in renewable space than what Sterling and Wilson is. When you compare the numbers also or the capacity they have, I think they are on a better bet. But since the gentleman is already holding Sterling and Wilson, I think one should continue to hold unless, of course, it's trying to put new money into it. If you are planning to put new money, then you could, of course, go for Adani Green or Tata Power. Sterling and Wilson, of this massive correction, I think it's on a reasonable level at these levels. It's just a hold from our side.
All right, so that's the view with regards to where Sterling and Wilson is concerned, and Rajesh has given his preferred picks in the renewable space as well. Moving on to the next query, IREDA is the next counter that we're talking about. Vishwa Vijay from Orissa is holding 300 odd shares, bought at 263 a piece, and he's sitting on a significant loss is what he's saying. And he wants to know what should be the next course of action for this particular counter. Vaishali, a very good morning to you. I'll come to you on this one. What are the charts indicating for something like an REDA?
Good morning. Yes, so I think, what market on the whole right now, we are seeing a good corrective move. So talking about REDA also, it's on a downward trajectory. But I guess for now, the charts, what we are seeing is it's still showing higher bottom formation. So I would say keep 140 as your stop loss and continue holding. The confirmation of strength comes only above 170.
Okay, so that's the view on IREDA. Let's continue to talk about the implications of the Monetary Policy Committee's unanimous decision to cut interest rates and also the shift in policy stance to accommodative, what that means for banks going forward, because you have interest rates that are set to go lower for your deposits and also lending rates, but they could be heading even lower down the road as well. Rajiv Anand, Deputy Managing Director of Axis Bank, joining us now. Rajiv, very good morning to you and thanks so much for taking the time.
Thank you for having me.
Absolutely, my pleasure. Were you anticipating, is this par for the course? Is this something that was baked in, was built in? Were you, in fact, if anything, expecting something more? And what do you make of the accommodative stance and what that indicates for the path ahead?
I think the 25 basis points cut and the change in stance from neutral to accommodative, was broadly speaking, quite anticipated. And if you see the reaction from the bond markets, you can clearly gauge that. In fact, there was a small part of the market which was also anticipating, perhaps especially given what's happening globally, that the RBI could cut by 50 basis points. But the 25 basis points and the accommodative stance was broadly on expected lines, par for the course, as you called it.
Rajiv, there was an acknowledgement, and this is what I gleaned from the policy statement or what the RBI governor spoke about. There is an acknowledgement of the kind of uncertainty and vagueness in policy globally and the response and the implications, unknown unknowns, as he called it. And in that sense, are you having to, as a business, and would people have to reset their expectations for monetary policy in this year and going forward? I think even 3 months back, Rajiv, we were talking about shallow rate cuts in this cycle. Does that change now?
I think on the one side, the governor has acknowledged the fact that the inflationary environment in India is quite benign, and we are where he wants us to be, which is around 4%. And in addition to that, things like a significantly lower oil price is very positive from an inflation perspective, and the governor has sort of recognized that. On the other side, the RBI and the governor has also recognized the global uncertainty and has brought down their growth expectations for this year from 6.7% to 6.5%, and and to my mind, even the 6.5 looks a bit aggressive. So therefore, given that everything that's happening globally, I won't be surprised if that number over the next 3 to 6 months is pushed down a little bit. So therefore, in that sort of an environment, I think it gives the RBI space to be able to be growth positive or growth accommodative, and so therefore a change in stance from neutral to accommodative. And I think he made the important point that going forward, what accommodative means is that either rates will remain where they are or rates will come down, and so therefore a rate hike is obviously off the table. And I think that from a growth perspective is positive. And on the other side, we've already seen 2 rate cuts, 25 basis points cut in the previous policy, 25 basis points now, and it is anticipated that we could get at least 1, if not 2 more rate cuts as we go forward.
I'm glad for that perspective. In fact, I'm glad for the perspective that you're bringing as well, Rajiv, as a banker, because ultimately we're talking at a time when credit growth system-wide not necessarily the strongest. In fact, it has been a little bit muted, and there's an expectation perhaps that some of this will kickstart with a rate cut and more rate cuts going forward. What's your own analysis of what you're seeing on the ground? And also give me a sense of what you think the system level credit growth could end up being if some of the tailwinds, maybe from the fiscal side, that are kicking in this month will follow through as you maybe had anticipated.
If you look at last year, on the one side we saw significantly lower government spending in the first half of the year, and therefore we saw some sort of slowdown. As a result of that, we saw a 5 handle in one of the quarters last year. I think as we go forward, and anyway liquidity was quite tight in 24-25. As we go forward, both those will in a sense become tailwinds. What was an 80 basis points tightening for the last 2 years will become a 40 basis points fiscal tightening in the current year. And like I mentioned to you, from a monetary perspective, where liquidity was tight in the last year, we've already seen liquidity being in surplus at this point in time. The governor has also moved his stance from being neutral to accommodative. I think both those headwinds have now become tailwinds, and so therefore we are certainly a little more positive about credit growth in 25-26, which was around 11% in 24-25. We anticipate that number should get to somewhere in the vicinity between 12 to 13% in the current year. Having said that, I think one also needs to take into consideration the fact that the global environment has turned fragile thanks to everything that's been happening around tariffs over the last few days, and so therefore, where private capex was just beginning to tick up, it is possible that not just in India but across the world, private capex could slow a bit, and that could impact not just growth but also credit demand.
Last point that I want to raise with you, generally in a falling interest rate scenario, banks have to contend with compressing net interest margins, and I also want to understand from you the implications of the difficulty banks are facing in mobilizing deposits at a time when rates are coming off. One would assume that the attractiveness of deposits also becomes lower. Do you think that that's going to be a challenge, and what is your own estimation or expectation for compression of NIMs going forward?
See, what happens, for a bank is, fairly thanks to all the measures that RBI has taken over the last few years, a very large part of the asset book is what is called external benchmark linked, and those reprice much faster, and obviously on the way down those reprice faster than deposits. But ultimately it's only a lead lag in this environment. Assets will reprice faster, deposits will reprice a bit slower. But if you look at it through the cycle, NIMs remain in a fairly tight range. And I think bankers like us and analysts who analyze banks clearly recognize this, that there's a bit of a lead lag on both sides, depending upon whether rates are going up or down. Ultimately, banks are basically a marginal cost business, because whatever the cost of raw material for us, i.e. deposits, is inevitably passed on to our customers who are borrowing from us, and through the cycle there could be some leads and lags.
Yeah, okay, leads and lags. Okay, so thanks so much, Mr. Rajiv Anand, for joining me this morning and for speaking to us. Pleasure speaking with you as always.
Thank you so much.
All right, let's go back to some of the questions that we have. In fact, we've got Surya waiting on, calling in from Chennai. Hi, Surya. Very good morning to you. How can we help you today?
Good morning. I need suggestions about Suzlon Energy. It's the right time to buy Suzlon Energy shares for long term?
Okay, that's a good question. Rajesh, I'll come to you. We already spoke about a couple of renewable plays. Suzlon is also one of them in the wind energy space. It's down to 51. Is this attractive now?
See, I don't think so. I would stick to my earlier suggestions of Tata, Tata Power or Adani Green rather than going for Suzlon. Although the fact remains that it has got a large capacity, reduced. In fact, it's almost debt-free after the fundraise and all. But still, on valuation parameters, I think the valuation still stretch after the correction. So I would say at this point of time, maybe a trading opportunity here and there it would have produced if there is a bounce back. But for investments, I will say avoid.
All right, avoid from an investment perspective is the view coming in from Rajesh on Suzlon Energy. Nidish from Bangalore is writing in for our next question and wants a view on Mazagon Dock. Again, this view is required from a longer term perspective. So Rajesh, I'll stick with you. What's your view on something like a Mazagon Dock and of course its peers as well?
See, very strong company, I would say. Go for it. The kind of correction it has witnessed in the last few days, 2-3 trading session has put the prices below the open offer price, and that's a very attractive price, I would say, for a long-term investor. Good order book, doing very well, prospects are very good. Not only Mazagon Dock, but the likes of Cochin Shipyard or a GRSE, they are also on a strong footing. If somebody has a time horizon of 2-3 years, these are the good companies to hold.
Mrs. Tilak Ved is writing in and sitting in Panchakula, as I understand it, and she's got SBI, State Bank of India, at a price of 703, and she's wondering at what price should she buy more for a period of 3 months. So first of all, that 700 around price is an attractive one. Vaishali, on the charts, how does it look right now?
So I think the stock overall is showing quite a good strength. So I would say that right now we are seeing a little bit of retracement. So in all likelihood, if you get a chance at around 740, 730 levels, that would be once again an ideal level, and look for a target of 830, 840.
Okay, so that's the view with regards to where SBI is concerned. Our next query is from Santosh, who's writing in from Chennai. He's holding 200 odd shares of Goldium International at an average price of 170. And he wants to know the view with regards to how US tariffs have been imposed on India and how it will impact Goldium International. Rajesh, I'll come to you on this one. I was talking to one of these gold exporters of India, and they said that they will be probably transferring the entire tariff pressure on the consumers and customers at the end of the day. So the impact will not be as much as the street is expecting. What's your view like for something like a Goldium International?
See, Mahima, this tariff is going to put a dent on global growth, and that's going to put pressure on these jewelry stocks, because if the growth is slowing down, who is going to buy jewelry stock? So, and the biggest problem is quantification of this tariffs at this point of time is a difficult task to do, in which company what will happen. It's better to avoid these kind of companies which are basically dependent on exports, and moreover jewelry exports, because as we have discussed just now, gold prices are very high levels, 90,000 odd, almost 90,000, and at this point of time I think these are stocks which should be better avoided.
Avoid gold I am as of now. Okay. A stock from a sector that is in focus, earnings of course for the IT space kickstart tomorrow. TCS is what kickstarts things. It's down about 1.3%. Remember, there is a major brokerage, Jefferies, that has come out and cut its view or its tag on TCS from a buy to a hold, and it's dramatically by 27% cut its target price as well. Rajesh, I don't know what you think about that. 3,300, if I'm not mistaken, is the target that they have. We've got a question, Satish Nanna, who's writing in from Goa, and he's got 700 shares of Infosys at 1,650. Can it be bought at the current juncture, particularly because, relatively speaking, there is also a conversation of a relative cheaper valuation for Infy compared with TCS?
I totally concur with your view that Infosys is relatively cheaper when you compare to TCS. Strong balance sheet, having good order book, order flows has been decent, I would say. And they are moving into AI and cloud and all those things. And at these levels, I think all the risk associated with the US tariffs or discretionary IT spending going slow has already been discounted. It can fall further there. I can't deny that because of market condition, but the valuations are very attractive. Somebody has a time horizon of 12 to 18 months or even higher. So it's a buy from our side at these levels.
Buy for Infosys from Rajesh's end. Continuing with the IT theme, Ajit from Bengaluru is holding Persistent Systems as well as LTI Mindtree, and the time horizon is 6 months for him, and he's sitting on an average loss of around 25% on both is what he's saying. He wants to know as to what should be the next course of action for him, and also wants to understand if he should switch to something more stable like hotels or hospitals. Vaishali, I'll come to you on this one. First of all, what are the charts indicating for something like a Persistent and LTI Mindtree, and if he wants to exit the two of them, should he enter some hotel or hospital that's looking attractive on charts right now?
I would say actually, the stocks have been really so beaten down and they are coming at good levels. So Persistent can be an add because, of course, to my understanding, everything is cyclical. Right now, with all this turmoil going on, I would say for a long-term perspective, it's an opportunity to buy. So LTI, Mindtree, Persistent, I would definitely suggest if you're holding at higher levels, add more at these levels. Wait for the markets to stabilize and you will see a good up move coming in these stocks as well. And as far as hotel and hospital stocks are concerned, we are already seeing a trend setting in. Already a run-up has taken because Apollo Hospital, they are all showing strength, but I guess not a good level to buy right now. So I would say stay put and add more in decline.
Okay. Muthoot Microfinance is the name of the counter that we're talking about. 129.9 is the buy price, I believe. No, actually, bought levels of 258, 259, I think, is actually what it is. This is Ajit from Kerala. What should he do? Rajesh, any view on this one?
Try to exit, I would say. Microfinance, as it is surrounded by a whole lot of risk, I would say. Yes, the NIMs are high, but then the risk is also high. There's always a risk of NPAs. So it's better to switch out of Muthoot Microfinance, or maybe a better NBFC like a Jio or a Poonawalla would be a better choice in NBFC space.
All right, Tata Elxsi is the next counter that we're talking about. Anshu from Chennai is writing in. He's holding the counter since 5,500 levels for the investment purpose, and he wants to know the future outlook of the company. Rajesh, I'll stick with you for this one. What's the view like for Tata Elxsi?
A very strong company, no doubt on that. They're doing very well on animations and these things. The order book is very great. Belonging to the Tata Group, there is no issue of corporate governance as such. The only issue is that it has exposure to US, from which we have seen a massive cut coming in Tata Elxsi in the last 3, 4, 7 trading session. So for anybody looking for buying for a long-term horizon, by long-term I mean at least 12 to 18 months horizon, 4,500 odd levels would be a very good levels to enter.
Rajesh, thanks so much for that view and indeed for joining us. Vaishali as well, thanks so much for taking the time this Wednesday, and pleasure speaking with you. That brings us to the end of this edition of Ask Profit. Thanks so much for tuning in, and do stay tuned. Up next is Know Your Company. This is NDTV Profit.
it's out.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razor Pay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120 unicorns that India has, Razor Pay powers almost 105 of them.
Then there is delivery. This stock has also been buzzing in trade. Dealers are indicating that there's a potential corporate development announcement, some acquisition announcement that the company could do when it comes to e-commerce express delivery space. So keep an eye out for delivery as well.
He sold most of his stock, 80% as on that date.
We have requested the
Hello and welcome. You're watching KYC, Know Your Company. It's a show designed to give the regular investor powerful, actionable insights into the fundamentals of single listed companies daily. Today we're going to look at transformers and rectifiers. Ironic because we've also looked at power grid earlier this week, and therefore transformers is the other space within the power basket which is in focus. Now this is a stock and a company which has just put out its Q4 numbers, FY25 numbers as well, and therefore of interest. Couple of days where the stock has been buzzing, and it's a space which is very interesting at this point because it's inward facing, not facing too much of that tariff impact, at least no direct impact. Now in terms of why or what the company does, it's one of India's largest domestic transformer manufacturers. Now what's a transformer exactly? It's a device that transfers electrical energy from one circuit to another using electromagnetic induction. So it's a device which allows you, when you switch on a switch or switch it off, the power to get calibrated at the back end to ensure that you are getting power. This device enables the transmission of power through the circuit or through the cable, and it also ensures voltage required to be provided. So both of those. Now in terms of products and offering, let's pull up all the products. It's into a whole host of products, to be frank, across the spectrum. You have transformers, distribution transformers, furnace, rectifier and shunt reactors. It deals across the board with all of these different type of transformers for different use cases, and therefore has that product offering, and also has it across voltages. So it covers various voltages across products as well. In terms of where is it finally utilized? Largely in the power transmission and distribution segment right now. There's very heavy capex anticipated in that segment. When we were speaking about power grid, in fact, in particular, nearly 20 to 30,000 crore of capex each year annualized over the next 3 years is the capex pipeline for power grid. So you will have a very, very large capex coming through, nearly 70,000 crore by power grid alone. And all of that will, to a large extent, require transformers as well. So that's one pocket. The other one is the industrial sector. They will also require such devices. Now, in terms of capacity, let's talk about how much capacity they have. That's how their capacity is split up. But largely, around 37,200 MVA, all of that is sitting in Gujarat at this point. And capacity, in fact, can be increased to 42,000. And that will happen only if similar types of orders trickle through. So if there are 2-3 orders from the same vendor, they actually have, at the current capacity, the ability to manufacture up to 42,000 MVA. There's a tailwind in the transmission and distribution sector. There is a tailwind in terms of capex. You're expecting around 2.5 lakh crore of transmission capex for the next 3 to 4 years. This is as per industry and analyst estimates, of course. So this is the kind of large size that you have. This is, of course, across the board. It also includes wires and cables. So maybe that to be kept in mind, and not purely for transformers. But because it's in transmission and because transformers is vital to transmission, you will have this as something which is relevant. And 50+% exposure of the company is to central power transmission utilities. So you'll have all of that which will likely come through for something like a trill. We will speak with CSS Rajora, who is the CFO and advisor to the board of transformers and rectifiers, and we'll get a perspective, of course. But before that, let's try and break this company down. Let's try and talk about the metrics that we will talk about where this company is concerned. We'll start off with the income statement. We'll also look at the balance sheet thereafter, the cash flow, the return ratios, and then we'll look at shareholding, street cred. We look at the order book as well as the outlook that the management has given. And then last off, we look at street coverage and valuations. We've coupled a few of those metrics because order book plus outlook will give us a good understanding of how execution will play out, and street coverage and valuations will give us a good sense of how the valuation is as of today. And therefore, it will give us better perspective. That's how we've kind of broken it up. And joining me today to really help me break this and try and help you understand this better is Anushi Vakharia. Anushi tracks the power space closely and therefore is going to be helpful in trying to break this down. Anushi, let me allow you to start with the income statement.
Right. So now, since the focus right now for transformers and rectifiers is the Q4 numbers, let's start off with that. It's been a strong quarter for the business. This is led by better execution as seen by the revenue numbers. It's reported about a 32% of a growth here, while EBITDA has seen about a 83% of a growth, with the margins now standing at 19% as compared to 14%. Now, do note that in this quarter, we have seen higher ticket orders, so because of which we are seeing this margin expansion which is there, but the company did say that for FY26 it expects this number to be the mid-teen ratio, so bear that in mind. Net profit has seen about a 126% of growth, but a couple of factors which led to this. Firstly, the higher other income along with lower cost of material is something because of which we are looking at such a high profit number for this quarter. But let's look at this annually as well. If you take the last 4 years in perspective, if you are seeing the revenue CAGR for 4 years, that's roughly about 28% of a growth is something that is what we are seeing. And net profit, however, seeing about a 135% of a growth. In fact, if we see FY25 has been a strong year for the business, seeing about a 56% of a revenue growth, margins inching upwards in the range of 16% as compared to 10%. Now, do note that the company has maintained its focus on being completely backwardly integrated. This is by FY27 it's saying. So, operational leverage is something that we should continue to see favoring the business going forward. Net profit also 216 crore is the figure that we are looking at compared to 47 crore. Again, the factors already mentioned as to why we are looking at such a big jump in terms of where the net profit is. So strong numbers in terms of where income statement is concerned, Harsh, but let's also talk about the balance sheet, right?
Well, yes, absolutely. In fact, the balance sheet also doesn't look all that bad. They've done a couple of fundraisers to pare down on debt. You can see that reflecting in the equity share capital. Also, you can see how long-term debt has continued to remain as is, no real increase or inch up there, and so is short-term debt. Cash and bank balance is also fairly healthy at around 167 odd crore, and for a 15,000 crore market cap company, you're largely seeing debt plus cash really well placed in that sense versus the market cap of the company, and therefore no concern with regard to debt, and that's at least how this one is looking at this point. Overall, we're giving this a thumbs up because debt, not much of a concern, decent amount of cash on the balance sheet, good free cash flow coming through quarter after quarter. It's a profitable company, margins are getting better on the income statement side as well, and therefore no concerns on the balance sheet. Cash flow, Anushka.
Right, cash flow, if we see, we were just discussing about it, how for the 4-year figure, we are looking at an annual CAGR of 4-year annual CAGR in terms of where the EBITDA is concerned, roughly around 28%. But however, if you look at the cash flow from operations, despite seeing overall a healthy picture, we are seeing about a 190 crore of a position by the end of FY25. It's around a 19% of a 4-year CAGR that we are looking at in terms of where the cash flows are concerned. Overall, if we see what has happened in the course of these 3-4 years, we are looking at increase in payables versus receivables. So it's because of these receivables and the trade payables that we are looking at such variation in terms of where the cash flow from operations are concerned. If we take the net cash flows in perspective, the net cash flow for this year stood at about 3.66 crore. This is compared to the March 21 figure that we are looking at, some negative 3.6 crore number is what we are seeing. So cash flow overall, we are giving it on the neutral. That's what we are seeing for cash flow, right?
Correct. And EBITDA, in fact, Anushi, has gone up 48% on a 4-year CAGR basis, but we're not seeing that translate to cash flow. So that's something that we'll actively watch out for, because a lot of that is being diverted towards payables and receivables. Can that change will be the question, or does that remain as is? And now can growth start to come through on the cash flow side of things? Even cash flow otherwise, I wouldn't complain too much with regard to net cash flow, Anushi, because they are investing in fresh capex and they are doing fundraisers as well. So investing as well as financing is kind of there is a bit of churn there, and but I wouldn't be too worried about that. Okay, I want to quickly also look at the return ratios. That's something that's on our radar. Now, return ratios have been getting better it's on an improving trend, as you can see. There's also sectoral tailwind with regard to products. You're seeing a tailwind with regard to growth as well. And that top line, the operational efficiency is starting to play out on the bottom line. And I'll just quickly give you the profit number. PAT has gone up from 7 crore in March of 2021 to 211 crore in March of 2025, annualized PAT. And therefore, you can see that real sharp jump, 30x with regard to PAT, which kind of somewhere is impacting both your ROE and your ROCE ratios. In fact, ROCE is getting even better because on the ROE count, there was some amount of debt which has been paid, and now you're starting to see ROCE really pick up well. So that 15% kind of ROCE number is now jumping up to around 28%. Whether this is sustainable or not is, of course, a big question. And they are also doing fresh capex, and therefore you might see some bit of fluctuation here. But otherwise, the kind of jump that we're seeing from mid-teens to mid-20 plus will be something that it clearly gives this one a thumbs up, especially on their FY25 numbers as margins get better. And also, whether this is sustainable or not, we'll also get a better outlook from Anushi when she covers the outlook as well as order book. So, but Anushi, why don't you take up shareholding pattern?
Okay, so in terms of where the shareholding pattern is concerned, if you take the last 3 quarters in perspective, we are seeing this promoters holding about 66% of stake in September 24, while this was the kind of shareholding that they had in June as well. coming down to 64% by the end of this fiscal year. Do note that there was a QIP which was launched in June 2024, because of which we are seeing some dilution in terms of where the promoter holding is concerned. Whereas on the other side, we have seen a pickup in terms of where the FII and the DII share is concerned. Around 9.34% was the stake that they held before, which increased upwards to around 11% of a range. And similarly also for DIIs, we are seeing this number from moving up from 7, almost 6.9 to almost 7.2%. Again, even if we see in the last 3 years, 2-3 years, what has happened, there was another QIP issue as well. So considering that overall picture, what was a 70+ % of mix that has come down to 64% by the end of this fiscal year. Public shareholding on the other side has majorly remained in the levels of 17 to 17.5%. It's where the FIIs and the DIIs have shown higher interest for the company, and we are seeing pick up in the stake of these two shareholders which are concerned, right, Harsh?
Yeah, absolutely. And promoters, just quick addition here, they've sold around 27 lakh shares, which is roughly 1% or so, in the month of October 2024. Of course, there were enough buyers to offset that, but they've done it at 780 rupees a piece. Today, stock trading at around 580. So that's probably one of the other reasons why we've given this a neutral. Also, when we're looking at the 4-year picture, promoters held around 75% of the share capital. Of course, they've diluted through QIP, they've diluted through fresh equity raise, but there has been a dilution from that 75 to 64, and there's also been a sale during the same period of time. So maybe something to watch out for. What is the future outlook maybe in the next year or two? And this has happened over the last 2 years alone. Okay, so maybe 4 years back promoters held 75, but the real dilution has happened over the last 3 years through fresh equity as well as through one promoter sale. So maybe something to be kept in mind, and hence the neutral on this count. Let's look at Street Cred very quickly. In the last month or so, the stock is up 32%, so big thumbs up there. Last 6 months up 47% despite all the market turmoil. Last 1 year, stock is up 42%, but the 5-year picture is that the stock is up just about 40% over the last 5 years. So from a short-term perspective, has done very well. There's very good tailwind in the space, and therefore you're seeing that. But over the last 5, it's not done as well. We'll give this one a neutral as well, given that there's no sustained stock performance, right, Anushi? The small and mid-cap space has done very well in comparison to this one when you're looking at the 5-year.
Very interesting picture on the short-term performance of the company, despite the kind of markets that we have seen, how it has done so far. But let's talk about the order book position. I think that's the standout over here for the company. If you look at the order book, that stood at about 5,132 crore by the end of this fiscal, seeing about a 98% of a jump. Of course, it was supported by some high order sizes, especially the order that they've received from Getco, aiding it. Order inflows, if you are seeing, were up around 5.2 times at 2,144 crore for the year. Overall order inflows stood at 4,504 crore. And in fact, if we look at the inquiries under negotiation, the company has stated that the ratio for the number for this stands at about 22,000 crores. So strong order book positioning that the company has. Other than that, even if you look at the outlook forward for the FY26, they've already given us perspective here. Expect around 3,500 crore of revenue by the end of FY26. This is with a margin expectation of 15 to 16% is what we are seeing. The company did say that by the end of 3 years, they're aiming for a $1 billion size in terms of where the revenue is concerned. And again, in line with the targets of maintaining healthy margins, they are aiming to be fully backwardly integrated by the first quarter of FY27. Along with that, we are also looking at some capacity expansion plans which are going to support this revenue growth, including the likes of first phase of new capacity addition of 15,000 MV of IDT transformers. Along with that, some expansion happening in the EHV transformer facility as well. So strong plans in terms of capacity expansion. Also, they've outlined about 550 crore or so for the next 1.5 years. Right.
Absolutely. Now let's look at street coverage and valuations. Very quickly cap it off. There are just 2 buy calls on this one. No sell calls per se, but just the fact that there aren't enough analysts tracking it gives it more difficulty in terms of ascertaining whether this will actually come through in terms of guidance. And therefore, let's try and extrapolate what those numbers look like. The EBITDA for FY26 is expected at 525 crore. The assumptions made here is a 3,500 crore top line in FY26. That's what's been guided. And a 15% margin number, which arrives at a 30 times EBITDA as of today, as of today's stock price. The other thing is the FY28 guidance. The aspiration is to take it to $1 billion in revenue at a mid-teens kind of a margin number. If that were to come through, you will see likely the EBITDA number more than double. If that were to happen, it will trade at 12.5 times FY28 EBITDA. Again, certainly not cheap, but you'll want to look out for this one because growth is extremely strong. Therefore, a neutral. Let me quickly bring on board Dr. CSS Rajora, who's the CFO and advisor to the board for Transformers and Rectifiers India. I want to, sir, quickly first ask you, what is the sustainability of the 19% margin you've clocked in Q4? You've guided for a mid-teens margin in FY26. Is that a conservative guidance is what I'm trying to get to? Or can you clock close to a 20% guidance going forward for the next 2 to 3 years is what I want to understand.
Thank you, Harsh, for having me here. And,
pleasure having you here, sir.
Before I answer your question, I was just hearing you that you're telling me that promoter has done the block at 780 crore rupees, 780 rupees, and right now the share is 526 rupees.
Correct, sir.
But you forget to mention that this 520 rupees is after the bonus of 1:1.
Correct, sir. Yes.
So that is, and the block was done well before that.
Correct.
Right?
Yes.
So effectively, if you see the pre-bonus, it is 1,050 rupees price levels.
Point taken, right? Sir. Point taken. Yes.
Coming to your question on sustainable margin side, we have been guiding from the day one that the margins will remain somewhere between 16 to 17% level, and that I feel is the sustainable margin. This sustainable margin. What I am mentioning here is only and only from the transformer business. But what the backward integration activities, what we are doing is going to be help us in the margin level from 150 BPS to 200 BPS points from the year 26-27. So you can see that once that number will start coming up, there will be a considerable amount of shift into the margin size.
This is Anushi joining in. Now for FY27 is a year that we are looking forward. There's a lot of capacity expansion plans already. One is the IDT transformers that we are seeing, even the extra high voltage cable transformers. We are looking some of capacity expansion panning out there as well. Considering that you already have a strong growth for FY26 and 27, you're targeting around a 3,500 crore of a revenue here. Just want to understand the picture from you in terms of where these capacity expansion plans are concerned. What is the kind of utilization rates that we will look forward from the first to second year onwards? How do you plan to increase it so far? And what is the kind of margins that we will see after once all these new capacities are on stream?
Usually we are very quick in implementing our plans. In April last year or March last year, we have guided that we will be achieving a 2,000 crore rupees number in this March, and we have achieved that by implementing our planning in a very proper manner. In March, we had started one capacity expansion of 15,000 MVA, and I'm happy to say that next month that will be start the commercial productions. Right. Apart from that, we are also coming up with the expansion of 22,000 MVA in the extra high voltage transformers, and that is going to be in place from February, March next year. This will take us to close to 70 to 75,000 MVA. But here also there is going to be a good amount of the capacity addition because of the operational efficiency and because of the backward integration activities we are doing. And these things are going to add up into my capacity at least by 15%. So that is the expansion size or criteria what I am telling you. As far as demand side is concerned, see, today we have 5,000 plus crore rupees of demand of order book, and we are aiming to the 8,000 crore rupees of order book by end of this financial year. And this does not include any business any order from the capacity expansion which is coming now. If we add up that, then this is going to be had increased further. As far the utilization of the capacity is there, though we have achieved 29,000 MVA this year, but we feel that we are still underutilized. So we aims to utilize our facilities by 80 to 85% by close of the next year, and that is where we are targeting into that.
Mr. Rajora, what I would also want to understand from you is what are the risks to this tailwind in terms of demand? You're in a positive cycle, you're setting up capacity, no doubt, with regard to both capability on execution as well as setting up capacity. There's no doubt financially in terms of balance sheet strength, you're there. But what could the downside risk be? Could orders inflows start to taper is really the question, and what's the risk of that?
There are two risks which I tell you. The first border risk is that development of the country is stopped, or our grid expansion has stopped, which is not going to be happen because the way we have been interacting with the agencies and the government agencies, they are just behind us on the supply side. Right, they almost their representatives are at our office, and they want the supplies to be streamlined as fast as possible, and our productivity should increase as early as possible. And they are now not discussing with us 1 year requirement, 2 year requirement. They are discussing with us next 5 years requirement, that how much we can give in next 5 years. Just to give you a very small example of the distribution plan which has been laid down by CEA. As per that plan, from this year, from last year basically, to 2030, CEA has predicted that 392 numbers of 200 MVA plus transformers required every year. And we are not giving them half of that so far because we don't have the capacities. Plus 190 numbers of reactors are required, and we are not giving 1/4 of that reactors. So there is, I don't feel that any demand supply issue is there. Industrialization is growing very fast. Private players are coming up, and it's the renewable energy requirement is going to add up this further, because by next year all the big solar farms are going to come on the commissioning stage, and they will require a huge number of IDT transformers.
Got it.
The IDT facility, what we are putting up, big players are talking to us just to block.
Mr. Rajora, sorry, I'm going to take maybe 10 seconds in terms of a question. The export demand is extremely strong. There's a 3-year lag there. If you can explain in 30 seconds, why would you want to keep exports capped?
Very simple answer is that for us, India is first.
Okay, point taken. Thank you so much, sir. It's been a pleasure speaking and understanding this, but completely out of time on this edition of KYC. Thank you for coming.
Thank you, and I'm really impressed with the detailing what you have done about our company. Thank you,
sir. Thank you for that compliment. Thank you. Of course, Anushi has really worked hard on this one. So thank you. But anyway, out of time on this edition of KYC, we're going to quickly look at the rating very quickly. Income statement, thumbs up, balance sheet, cash flow, return ratios. And we had shareholding, street cred. We also had order book outlook and street coverage, thereby giving this one a 6 out of 8 on our KYC rating. Completely out of time on this edition of KYC. Stay tuned to NDTV Profit. For now, it's a thank you from Anushi, myself, everyone who puts the show together.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razor Pay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
Those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
We want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razor Pay powers almost 105 of them.
Hello and welcome. Good afternoon. This is Markets at 12 and I'm your host Malika Mishra. We will be soon showing you the press briefing of the RBI Governor Sanjay Malhotra after the monetary policy announcement. The biggest news of this morning is the fact that the RBI has reduced repo rate by 25 basis points to 6% and has changed its monetary policy stance from neutral to accommodative, and has also in fact lowered the GDP growth forecast for FY26 by 20 basis points to 6.5%. Now, post the announcement, benchmark indices slipped a bit, with the Nifty and the Sensex trading with cuts of around 0.5% now. In fact, the broader markets are currently reflecting a bit more pain, with the Nifty mid cap 150 and the Nifty small cap 250 also down over 1%. Currently, as we speak, the markets are more in the bear territory, with most sectors in the red except FMCG, consumption, auto and rural. IT index is dragging the most at the moment, followed by PSU, realty and media. Top losers, speaking of the top losers in the Nifty 50 basket, there are IT stocks. And before that, let's cut across to the press briefing immediately.
This financial year and in this new setup, friends, we have with us Governor Reserve Bank of India, Shri Sanjay Malhotra, Deputy Governors, Shri M. Rajeshwar Rao, Shri T. Ravi Shankar and Shri Swaminathan J. We also have with us Executive Directors, Dr. Rajiv Ranjan and Dr. Ajit Joshi, as also other colleagues from Reserve Bank. Sir, with your permission, we'll move directly to questions and answers. Yes. So before we begin, I'll request all of you to please wait for your turn. Before asking question, please switch on the mic which is in front of you, because otherwise people who are listening to this live feed will not be able to listen to you. And also request to switch it off once your query is over. In interest of time, as I always request, please stick to one question per person, and we'll see if time permits we can take the other one. Sir, there are 26 people from media today, and with your permission, we can commence the question and answer. I'll request Mr. Laltendu from The Hindu to ask his question.
Thank you very much, Putin sir, Governor sir, good afternoon, and everybody good afternoon. Sir, my question is about the trade war. You already made a reference in your statement about the noisy trade war that is happening. It started with reciprocal tariff, then retaliatory tariff, then again counter-retaliatory tariff. I could call it a revenge tariff. So whether we should be worried about or not, and what is your assessment of the situation, sir? Thank you.
I think this question, we fairly covered in my statement as to what its impact really is going to be globally as well as for the Indian economy. Globally, you are aware that most of the forecasts now for the GDP growth rate for the global growth rate have come down, by at least 20 to 30 basis points, not only for this year, even, for next year. And similarly, inflation, there is mixed response globally for inflation, especially for US, it's projected forecast to go up because of the tariffs that they will be imposing. For other countries, the impact would be different, depending on the situation that they are in. For India, we have given, our assessment. As you can see, the growth rate we have reduced by 20 basis points this year, primarily arising out of the uncertainties, the various channels through which this I elaborated in detail in my statement. And on the inflation front, we have said, it can move actually both ways because of the surplus, because of the demand that is going to shrink as a result of the trade tariff friction. It may help, on the inflation front. You are seeing that the crude prices have also gone down. So, all in all, more than, inflation, we are concerned about its impact on growth. And accordingly, you can read the statement for further details. Thank you.
Thank you, sir. Next we'll have Lata from CNBC.
Thank you very much for the opportunity. Governor, you had said that the real rate for you should be 150 basis points in a previous conference. Now, per your forecast, throughout this year, inflation is going to be below 4%. In which case, the real rate today is actually 200 basis points. So, do you think there is a chance for a double rate cut should have been already, like a 50 basis? Because we are very far away from that 150 real rate. We are at 200. And do you think the real rate itself should be 5/4 because you are expecting inflation to be even below 4%? How would you assess that? And just a related question, liquidity in the past, the Reserve Bank has guided on the liquidity amount. That helps transmission, basically. They have said that we want liquidity to be 1 to 1.5% of NDTL, or negative 1 to 1.5% of NDTL. Would you want to give the bankers some comfort zone like that? My liquidity threshold is 2 lakh crore, or some percentage of deposits, so that transmission happens.
So, this figure of 1.5%, I don't recall, having made it. Maybe some of my predecessors may have made that statement. I think from studies that we have, the real rate is to be in the range of, different studies are there, from 1.1% to 1.9%. So 1.5% is quite a plausible, real rate, or a natural real rate, as you call it, over there. Insofar as the policy rate is concerned now, going forward, we have, as you can see, we have changed the stance from neutral to accommodative. So obviously, the trend is going to be downwards. As regards inflation, the average is 4% this year. The average next year, we really don't know, right?
The calendar year, it is below 4.
For the calendar year, yes, it is below 4. But for the next quarter, for the first quarter, it is more than 4%. We will look at, the evolving situation, as we have already mentioned, and basis our forecast and outlook for the growth and the inflation. As you are aware, these are uncertain times, and so we will take a call as to where the policy rate should actually move to. With regard to liquidity, I already made a mention in the statement, without giving any numbers over there, that we will keep it sufficiently in surplus. I again reiterate, that we will provide sufficient liquidity for the purposes of monetary policy transmission. I don't want to give a number, really, as to what kind of a surplus, but sufficiently in surplus. And you mentioned, linking it to NDTL. Well, yes, that is the kind of number, about 1% or so in the surplus range now that, we are on the easing cycle. That is the kind of, number that we will be looking at. And we'll keep it sufficiently, surplus. The aim really is to look at the policy rate. So if we are able to transmit it, to the overnight rate, hopefully it will then transfer to the other short-term, medium-term, and the long-term interest rates. Transmission, you are aware, it takes a little while. It's not over. It will not happen, immediately. We have seen it in the past, that transmission, when we increased it by the repo rate by 250 basis points, it took 6 to 9 months at least, for the interest rates to decrease in response to the policy repo rate decrease. And they also, did not decrease to a corresponding amount. The decrease was about 204 basis points only, as against the 250 basis points increase in the repo rate. So we are watchful. We will provide sufficient liquidity to the system so that this transmission of the policy rate into the interest rate happens quickly. Thank you.
Thank you, sir. Moving on to Mr. Vishwanath from NDTV Profit.
Thank you for the opportunity, Governor. I must say, happy to be back in this room. It's looking a little better now. I wanted to ask you, since you mentioned transmission, I just wanted to get a view that there was a view from the RBI, or at least reports suggested that there was a view from the RBI that credit deposit ratios at banks were, private banks were way too high, and that they needed to come down. Now that we are talking about transmission, eventually, obviously, that will have to translate to higher lending. Are you happy with the credit deposit ratio at this point in time? And the second part is then there's a view that RBI will have to do, or the monetary policy will have to do the heavy lifting in supporting the economy in the current macroeconomic setup. Do you agree with that? Do you think that you have the bigger responsibility to manage in the current scenario?
So coming to your first question, CD ratio, see, when we were in the districts, then we would look at CD ratio basically to see as to whether the credit as a percentage, of the deposits is sufficient, whether, the lending is going on sufficiently. And at that point of time, I'm talking about 25, 30 years, we used to think that 75%, is very good. So some regions, have low because they are savers. Some, where there are more of borrowers, you have high CD ratios. Coming, to your question, CD ratio, well, we do not have, any such prescription of a CD ratio. You are aware that there are no regulations for CD ratio. And however, we do have regulations for asset liability management. That's more important. We have regulations for liquidity management, and there are regulations for liquidity, for the short term in the form of the LCR guidelines that you are aware of over the 30-day period, requiring banks to maintain, and even NBFCs to maintain high quality liquid assets. And similarly, for a longer 1 year duration, there is this NSFR, NFSR ratio that we have prescribed. There is no ratio or no guideline with regard to CD. The banks have to be actually mindful of managing their asset liability, which is important. They have to be mindful and ensure that they have liquidity, both short term and sufficient funds, over medium and long term, so that there are no mismatches and there are no liquidity related issues. So they can look at, their own assets, liabilities, and make a business plan according to them. We do not have any prescription for CD ratio. It is for the banks to decide. Your second question, it's a joint effort. Who does more of the heavy lifting, etc. It's a joint effort. The government has done its bit, I think, in the budget that you saw recently. A large number of measures, whether it is in terms of the increased capex, whether it is in terms of the tax rebates on the personal income tax side. And we will also, we have reduced repo rates. We have changed the stance going forward, which means that the direction of the policy repo rate is downwards. Where it will reach, Lata, of course, asked that question. We really don't know. I am Sanjay, but I am not Sanjay of Mahabharat to be able to, foresee that far. I do not have that that divine vision, that he had. But we will jointly, try to manage the growth and the inflation dynamic in our country.
थैंक यू सर. अब मैं ईटी स्वदेश के अनुराग शाह को आमंत्रित करता हूं.
नमस्ते सर. सर, जो पर्सनल लोन पे आरबीआई की चिंता थी, अब उस किस तरह का रुख है? क्योंकि हमने FY25 में देखा है कि सबसे बड़ा सेगमेंट जो है पर्सनल लोन का रहा है. तो अब जिस तरह से सर पर्सनल लोन के अंदर ही टेक्नोलॉजी बदल रही है और अलग अलग सेगमेंट भी उभर के बाहर आ रहे हैं, जिसमें हमने देखा है कि जो आम लोग हैं उसमें हिस्सा ले रहे हैं, जैसे हेल्थ केयर हो गया, इंश्योरेंस प्रीमियम वगैरह भी पर्सनल लोन के हिस्से में आ रहा है और वहां पे बड़ी अमाउंट पे ब्याज भी वसूला जा रहा है. तो क्या जो आज को लेंडिंग से जुड़ा हुआ जो आपने ऐलान किया है वहां पर राहत देते हुए उस संदर्भ में है, या फिर एक अलग सेगमेंट बनाया जा सकता है जहां पर जो जरूरी चीजों से जुड़ा हुआ लोन लोग लेते हैं उन्हें राहत दी जा सके? और सर दूसरा छोटा सा सवाल होगा सर, जो आरबीआई का पहले रुख था कि जो बैंकों की सब्सिडरी है, इंश्योरेंस सब्सिडरी, वहां पे 20% तक ही आप हिस्सा अलाउ कर रहे थे, लेकिन हमने पिछले 3-4 महीने में देखा एक बैंक को 26% तक 2 कंपनियों में अलाउ किया है. अभी एक बैंक ने 30% तक भी हिस्सा खरीदा है. तो क्या रुख थोड़ा बदला है?
आपका पहला प्रश्न की चिंता है तो चिंता नहीं है, कोई चिंता नहीं है. देयर इज नो वरी. जो है हमारा जो सिस्टम है वो काफी अच्छा सुदृढ़ है और काफी मजबूत है. चाहे वो टोटल आप बैंकिंग सेक्टर, एनबीएफसी सेक्टर के बारे में बात करें या चाहे आप जो पर्सनल लोन के बारे में आपने बात की. मैं यहाँ पे ये आपको स्पष्ट करना चाहता हूँ कि पर्सनल लोन्स के लिए जो हमने रिस्क वेट बढ़ाया था हाल ही में 125% किया था, वो उसे एक बढ़ोतरी के रूप में नहीं देखना चाहिए, क्योंकि कोविड से पूर्व के पहले का जो रिस्क वेट था, जो हमने कोविड के समय में एक रिस्क वेट क्रेडिट को और अधिक बढ़ाने के लिए हमने वो रिस्क वेट कम किया था, तो उस लेवल को, उस रिस्क वेट को हमने वापस उस स्तर के ऊपर में हम लेकर के गए हैं. हमने उसको बढ़ाया नहीं है. हमने जो उसका ओरिजिनल जो उसका स्तर था उस स्तर के ऊपर में हम लेकर के आए हैं. दूसरी बात मैं यहाँ पे ये भी कहना चाहूंगा कि उसका जो रिस्क वेट है आज के दिन में, यदि जैसा कि कुछ लोग ऐसा मांग करते हैं कि इसको कम करना चाहिए, तो फिर उसी प्रकार से फिर जो दूसरे जो पर्सनल लोन है, क्योंकि जो हमने रिस्क वेट बढ़ाया वो बेसिकली जो अनसिक्योर्ड जो पर्सनल लोन्स थे उनके लिए बढ़ाया 125%, जो वापस से पुराना स्तर किया. तो फिर आप तो ये बात तो मानेंगे कि जो सिक्योर्ड लोन है और जो एक अनसिक्योर्ड लोन है उसमें रिस्क वेट में कुछ फर्क तो रहना चाहिए. तो वो फर्क जो पहले 25% था उसको हमने वापस से हम लाए हैं. कुछ चिंता का कोई, लेकिन आज के दिन में हमारे लिए इसमें कोई विषय नहीं है. दूसरा आपने जो प्रश्न किया कि इंश्योरेंस कंपनीज के लिए कुछ बैंक्स का जो उसके अंदर निवेश है उसके प्रतिशत को हमने शायद बढ़ाया है. जहां तक मेरी जानकारी है इसमें कोई बढ़ोतरी नहीं हुई है. पहले भी कोई प्रतिशत इसके अंदर में निश्चित नहीं था. आज के दिन में कोई प्रतिशत निश्चित इसके लिए नहीं है और इसमें कोई बदलाव हमने नहीं किया है. बैंक्स, एनबीएफसी, बैंक्स, इंश्योरेंस कंपनीज में निवेश कर सकते हैं. वो 51% या उससे अधिक भी निवेश कर सकते हैं और उससे कम भी निवेश, जैसा 30% आपने कहा, वहां पे भी कर सकते हैं. कुछ इसके अंदर में बदलाव हम लोग जरूर हमने पहले उसके लिए हमने ड्राफ्ट रेगुलेशंस हमने पब्लिश किए हुए हैं. उसमें भी इस संदर्भ में कोई बदलाव प्रस्तावित नहीं है. ओवरऑल क्या किस प्रकार से स्वरूप होना चाहिए, किस प्रकार से बैंक्स अन्य सब्सिडरीज में और कंपनीज में निवेश कर सकते हैं, उसके बारे में हम शीघ्र ही उचित निर्णय लेंगे.
धन्यवाद सर. नेक्स्ट विल बी मिस्टर मयूर शेट्टी फ्रॉम द टाइम्स ऑफ इंडिया.
Thank you, sir. Governor, I had a question on the gold loans development measures that you mentioned. You said there will be a harmonization of rules, but will that be tightening of by making them more tighter or making them easing the LTV?
In my statement, I never said tightening.
I
said the word is harmonization. The markets are reading it the way they will read it based on emotions, etc. Someone said, I think Benjamin Graham, that it is the stock market is a voting machine in the short run, and in the long run it's a weighing machine. So let's wait. I think for the guidelines will be issued soon. There is no, to our mind, there is no tightening. It is a rationalization only. It's broadly an extension of whatever on the conduct side primarily, whatever were the guidelines for NBFCs, those have been extended now to the banking sector also. You will shortly, we will publish. And these are draft guidelines. Subject to, further consultation and then finalization.
And so clarification on the 1% NDTL. So you're saying that the goal is to have 1% surplus liquidity in the system around 2.7 lakh crore.
I would not like to, pin myself down to, 1% exactly, but yeah, that is, the kind of range, near about, that range. If more is required, we'll do more. If less is required, we will do less. Main aim, as I mentioned, is to ensure proper transmission of the repo rate into the interest rates.
Thank you.
Thank you, sir. Next is Mr. Manojit from the Business Standard.
Good afternoon. Thank you. You said an interesting thing that the stance should not be directly associated.
Did you want to add on the gold loan, or we wait for the publication?
No, I think so. You have covered it. The draft circular will be out in public domain very shortly. I think you can see the details there.
Okay. Yeah. Sorry.
Yeah. RBI said this earlier, but not in as many words, that the stance should not be directly associated with liquidity conditions. If I understand correctly, you are aiming to have a surplus liquidity of around 1% of NDTL. So what does you mean by this? I'm aware that the liquidity framework is being revised now. Can you throw some light? What are the considerations for the revised liquidity framework?
Let's wait. See, right now under the liquidity framework, we are primarily looking at the overnight rate in the money market, and so whether it should continue to remain the same for the purposes of the transmission of policy. Repo rate, whether it should be that we should be targeting, or we should be targeting something else. That is something that we are consulting the various stakeholders, and shortly, we will come out. I really don't have, any specific answer, because that matter is still being deliberated. Would you like to add something on this?
Nothing. I think once we finalize, we are at this point of time discussing the issues. As Governor said, one of the things is what should be the target rate. You know that call volumes had come down significantly compared to other overnight volumes. And as usual, for any revision of framework or rethink of a framework or review of a framework, we would look at all the tools that we use. Currently, we use a range of tools of different maturities, variable, fixed, and all that. We'll look at those rates and see what changes are required.
No, but the objective is also to speed up transmission. Transmission now take 2 quarters. Is the objective also to speed up transmission? Do you expect banks to transmit this 50 basis point on a more, on an earlier? What are your thoughts on that?
Yeah, obviously one would like, that the transmission happens as quickly as possible, but then it should not be disruptive. So how do we do that is something, again, I think we will look into it, and we will take a call. Early, I will not be able to give a date because I have not reviewed it with my team, but we are looking to do it, as early as possible.
Thank you, sir. Next, we'll have Ms. Swati from Reuters.
Thanks a lot, sir.
So since tariffs have been the theme and something that was largely discussed, so just wanted to understand, China would most likely use, yuan depreciation as a tool, to get back at the US in the tariff war now. We've also seen, FPI outflows from India in April. We could see the balance of surplus being negative. What would the RBI's currency management strategy be? Because the rupee would definitely be impacted by what happens to the yuan going ahead. And in the same way, so when we've seen previous periods of crisis like the GFC, COVID, etc., we saw a lot more collaboration and coordination between global central banks. Is that something that is happening even now? Is there an effort being done on that? Thank you.
My understanding is, that the impact of these tariffs on India vis-a-vis some of the other countries, you mentioned China and some of the smaller countries, is much less. Our exports overall, about 12% of GDP, less than 1%, I think, for 2%, I think, for America, for USA. You compare it with some other countries, even China. China is about 19%. Germany is 37% exports overall. Even EU, is 30% plus. So our and smaller countries, have in about 80%. I'm not talking about those countries, Vietnam, Taiwan, etc. So to that extent, we are better placed than some of the other countries. That's why you are seeing that the these reciprocal tariffs on India are lower than, some of these countries, because our surplus vis-a-vis those countries is much less. And so we have, in some ways, I mentioned it in my statement also, that we have a comparative advantage. We may have, a comparative advantage vis-a-vis some of these countries insofar as the USA is concerned. But overall, of course, it is certainly still, a growth dampener. And insofar as the currency management is concerned, as you know, we do not actually intervene in the currency management. It's only, for excessive or disruptive volatility that we do so. We do not try to manage or target any rate or band or level of the Indian rupee.
Just clarifying that. So it's fair to say that, if there is a depreciating pressure on the rupee, RBI will let it slide. Is it fair to say that if globally currencies are falling and emerging market currencies are falling?
As I mentioned, if there is excessive, we don't, target any level. We do not target any level. I think the markets in India are quite deep, quite wide, and the market forces best know what the levels should be. Having said that, any excessive volatility, if it requires an intervention, we will not be found wanting. We will certainly intervene wherever it is required.
Thank you, sir. I'll request everybody to stick to one question only, so that everybody gets a chance to ask. So next, I'll request Mr. Ashish from PTI to ask his question.
Thank you, sir. So you mentioned about you can't possibly predict the way forward on the rates. But sir, what would be the stance if major central banks really continue to hold for long? You have taken a shift with the stance, but will it allow us the room to cut further?
I mentioned in my policy statement that what the impact really could be on the globally, of these global tariffs, etc., and uncertainties, what the impact could be on India. And primarily, we believe that the domestic inflation and growth is what is going to drive and determine our stance and our policy repo rate. So we'll continue to look at our domestic, while being vigilant, of course, and they will have certainly an impact. The global environment will have an impact. But as I mentioned, we are in a better position because our export, import, our interconnectedness with the outside world, vis-a-vis some of these smaller economies and even, China, larger economies, is much less.
Thank you, sir. Next, we'll have Mr. Anup from Bloomberg.
Governor, the tariffs have set in. Do you expect a currency war in the region, considering that we have different rates of tariffs here? And how will you respond in such a situation?
I understand what you mean by a currency war.
Competitive devaluation of currencies, sir.
I really don't know, what will happen on the currencies. Our currency is quite stable. As I mentioned, we have sufficient reserves, almost 700 billion, US dollars now, inching up over there. And our deficits are also, again, very sustainable both this year and going forward, the next year, 1%. So I really don't think, we are under any kind of a stressful position. Again, I mentioned, that's, I think, relevant over here, that our interconnectedness is on, especially, the trade side is less. Capital flows, again, we need good growth to come in over here. That will help. And we'll see, as the situation evolves.
Thank you, sir. Moving on, we'll have Ankur from ET Now.
Thank you so much for giving a chance. Governor, we have seen in the past that Reserve Bank of India has been little concerned about the co-lending arrangements, and there has been few scrutinies also. Today you have announced that the arrangement between banks and NBFC that will be extended to all other regulated entities, and also priority sector lending was the first preference earlier. Now you are saying that all other loans can also be utilized. Is there a shift of stance of Reserve Bank of India on these norms, both priority sector lending, because I saw that there were norms which were revised where thresholds were increased earlier in PSL norms, and now this arrangement between banks and other entities in co-lending?
I don't understand, the shift that you are talking about. I'll request the DG to come in case there is a shift. But I believe that the co-lending arrangement has actually helped in the priority sector lending, because it was restricted to priority sector lending, and now what we are doing is expanding it to the other segments outside the priority sector lending as well. Moreover, we are expanding it. Right now it was, only REs, only, the banks and the NBFCs which could enter into this arrangement. Now 2 banks together can also enter into this arrangement. The benefit, basically of co-lending is that on the one hand, you get benefit, the borrowers, get benefit of lower interest rates, because the banks have funds at lower rates. And what they don't have in reach is compensated, is provided by the NBFCs. So it's a win-win, primarily for the banks and NBFCs. So we are expanding it. You want to add something on the co-lending? Has there been a change in our staff? I thought, we have been...
Nothing much, sir. I don't think there has been any change in the stance. It is essentially, as you said, we are expanding the participants by extending this to all regulated entities. And we are also seeking to extend the coverage beyond the PSL. And also a bit of harmonization in terms of when more players come and more segments open up, it has got to be more clear guidelines. So the guidelines will be soon out. And we will take again the feedback, and in case if it requires to be fine-tuned, we will do. But it has been a beneficial arrangement for the market. While the AUM is not yet significant, probably by broad-basing the participants and the segments, we expect this to pick up. So the guidelines will be more facilitative in terms of ensuring that the borrower ultimately gets the benefit of someone who has a cost advantage, someone who has a reach. The benefit of both should reach the ultimate end consumer. That's our intent.
Thank you, sirs. अब मैं जी बिजनेस से एकता सूरी को आमंत्रित करूंगा कि वो अपना प्रश्न पूछें.
गुड आफ्टरनून सर. सर, आपने हाल ही में बहुत बार एक दो बार जगह आपने ये बोला कि केवाईसी जो है वो कस्टमर्स के लिए ईज आउट प्रोसेस होना चाहिए, बार बार उन्हें फोन नहीं आना चाहिए. तो इसको लेकर सर क्या हम एक्सपेक्ट कर सकते हैं, क्योंकि CKYC में बहुत सी इनडिस्क्रिपेंसीज हैं, बहुत सा रेपिटेशन है, डेटा पुराना है, और दूसरा ये कि बैंक्स में ट्रस्ट होने के लिए अब फ्रॉड, डिजिटल फ्रॉड्स बहुत ज्यादा बढ़ रहे हैं, लेकिन कस्टमर्स आज भी जब बैंक में जाते हैं एक जेन्युइन फ्रॉड को लेकर भी, तो भी पैसा वापस मिलने में बहुत दिक्कत आती है। तो वहां क्या कोई स्टांस जो है कड़े हो सकते हैं? म्यूल हंटर जो है वो मदद कर रहा है, या फिर IC4 के साथ अगर APIs बैंक अपने इंटीग्रेट कर रहे हैं, उस प्रोसेस में कुछ तेजी आ रही है? तो यहाँ हम क्या देख सकते हैं जो कस्टमर के लिए और इजी हो बैंकिंग करना और ट्रस्ट वर्दी हो, कुछ विश्वास बढ़े?
KYC हमारे लिए एक निश्चित रूप से हमारे लिए प्राथमिकता है कि किस प्रकार से हम KYC की जो पूरी प्रक्रिया है उसको हम सस्ता बनाएं एक और दूसरी ओर जो है उसको हम सुगम बनाएं। सरल, सुगम और सस्ता किस प्रकार से बना सकते हैं, ये हमारी एक प्राथमिकता है। और इसके लिए हमें बैंक्स और जो सरसाए है, जो CKYCR जिसका आपने जिक्र किया, उसको मेंटेन करता है, उनके साथ में तालमेल बढ़ा करके इसको और अधिक सुगम करने की हमारे को निश्चित रूप से इसमें आवश्यकता है। इसके बारे में मैंने पहले भी कहा है, लेकिन ये उतना आसान कार्य नहीं है क्योंकि इतनी अधिक संख्या में हमारी रेगुलेटेड एंटिटीज हैं जो कि भिन्न भिन्न स्थानों के ऊपर में KYC कर रही हैं। तो किस प्रकार से ये एक यूनिफाइड डेटाबेस हो जिसके अंदर में एक व्यक्ति का, यदि कोई भी रेगुलेटेड एंटिटी चाहे किसी भी नियामक आयोग, किसी भी रेगुलेटर के अंतर्गत आती हो, उसका यदि KYC हो जाता है तो पुनः दूसरे रेगुलेटेड एंटिटी को उसको KYC करने की आवश्यकता नहीं पड़े। CKYC सरसाई CKYCR को अपग्रेड कर रहा है। CKYCR 2.0 के लिए उसने कदम उठाए हैं। 100 करोड़ के करीब अभी उसके अंदर उनके पास में रिकॉर्ड्स हैं, तो ये काफी अच्छी संख्या उनके पास में ऑलरेडी हो चुकी है, जिसको हम आगे इसको हम लिवरेज कर सकते हैं। क्वालिटी के इश्यूज जैसे आपने बताया है उसको हमारे को इम्प्रूव करना पड़ेगा, लेकिन हमारा यही प्रयास रहेगा कि किस प्रकार से ऑलरेडी भारत सरकार ने अब ये निर्देश दिए हैं, एक नियम बनाया है उन्होंने, और हमने भी अपने निर्देश सभी रेगुलेटेड एंटिटीज को दिए हैं कि उसकी पालना की जाए कि KYC करने से पूर्व CKYCR को पहले वो चेक करें, वो देखें कि CKYCR में यदि डॉक्यूमेंट्स ऑलरेडी मौजूद हैं, KYC अगर ऑलरेडी पहले से हुआ है तो उसको पुनः KYC डॉक्यूमेंट्स न लेने पड़े। तो ये निर्देशों की, नियमों की पालना होने में निश्चित रूप से थोड़ा समय लगता है क्योंकि बैंक को अपना सिस्टम में बदलाव करना पड़ेगा, उनके IT सिस्टम में बदलाव करना, तो उसको वो बदलाव की प्रक्रिया जारी है क्योंकि ये हमारी प्राथमिकता है, भारत सरकार की प्राथमिकता है। मुझे ये विश्वास है कि निश्चित रूप से आने वाले समय में KYC और अधिक सुगम, सरल, सस्ता होगा। फ्रॉड के लिए हमने विभिन्न कदम उठाए हैं। मैं निवेदन करूंगा अगर आप अनुमति दें अंग्रेजी में।
Yes,
और हिंदी में मिस्टर स्वामीनाथन को कि वो जो है आपको विस्तार से इसके बारे में कि फ्रॉड के लिए हमने क्या क्या, म्यूल हंटर की क्या स्थिति है। मैं आई रिक्वेस्ट DG स्वामीनाथन, हमने म्यूल हंटर की क्या हमारी आगे के लिए 1 साल में हम कहाँ तक म्यूल हंटर में कहाँ पहुंचना चाहते हैं, कहाँ पे हम आज के दिन में आपने म्यूल हंटर का कई सारे प्रश्न आपने एक साथ पूछ लिए तो ये कई सारे प्रश्नों का जवाब देने के लिए let me get my team in.
Just to sum up on the responses, basically digital frauds has been a major concern for all of us, and we have been working to ensure that the fraud risk management and the proactive risk management systems that are operational at the bank level are improvised so that frauds can be prevented. Well, of course, you also mentioned about if it occurs, what should be the compensation. There are limiting liability guidelines that are already in place. What we also have to bear in mind is that such money moves very fast and it doesn't remain in the control of the regulated entities oftentimes. But wherever possible, they are being impounded and being refunded, while success rates depends on how quickly the complaint is lodged and how quickly it is acted upon. You also mentioned about I4C integration. Today we have all the banks have very actively, proactively integrated with the I4C system, and all the banks have also been mandated to have a 24/7 helpline and dedicated officials who will handle these calls so that any point in time the action is taken very quickly. Golden hour is what believed in the medical system. The same thing is what we believe in digital frauds as well. We should adopt. The third is in terms of Mule Hunter. The pilots have been extremely successful. The results that are coming out in terms of having the whole system level data, the fraud prevention system in the banks work on their own bank data while the Mule Hunter facilitates system level data. The pilots that we have done with large banks have been highly successful. The outcomes are almost near real time and the models have proved to be effective. But these are AI/ML based models. They need time to learn. They need more data to digest and then become more successful. So we will take this pilot into production as quickly as possible. Innovation Hub has been working with the large banks have been participating. It is our intention that we become as near real time as possible to ensure frauds are prevented as much as possible, and should a fraud occur, and recover as much and as quickly as possible. That's the aim, but this will be a journey because we have to remember that the fraudsters are always one step ahead. So we are invariably on a catch-up game, but we will probably catch up better.
Dhanyavad sir, thank you sir. Next we'll have Gopika from the Mint.
Thank you, sir. Good afternoon, Governor. Since the time you took charge, we've seen 3 crises at 3 different institutions, one at a private sector bank, a new cooperative bank, and a housing finance company. What are the key, these 3 crises have happened under RBI's nose over a long period of time. What is RBI's learnings from this? And secondly, in the private sector bank, IndusInd Bank per se, RBI would have received the internal review report. Are there any concerns that we have to be worried about? And the management has been allowed to continue. So could you tell us your views on this?
See, individual entities, you are aware, we don't get into, the specifics of the individual entities. At a system level, I would say that, and I mentioned this even in my statement, whether it is the cooperative banks, whether it is the NBFCs or the scheduled commercial banks, etc. System level, we are very, very safe, secure, robust. The system is resilient. The other thing is that let's keep in mind that it's a very, very large system. There are a large number of players, almost 10,000 NBFCs. There are about 1,500 cooperative banks. So I was looking at data in last 8 or 9 years, some 70 cooperative banks out of 1,500 cooperative banks. So that makes it about, you can calculate. So it's very small, in numbers it may seem, So these things will happen. Our effort is to minimize the impact, to minimize them. And I think it is quite it's a reasonable, it's quite low. It's quite low. If you look at, I will not have data to support that, but I would tend to believe that, and I would not call them, total failures also. So I'm not, these are episodes. These are episodes, right? They're not even failures. These episodes will happen. We have to ensure through various means that these events, incidents happen lesser in frequency. They happen lesser in frequency. And for that, we have various tools. We have the regulations. We have our supervision. The banks themselves, have multiple layers. They have 3 layers: the business unit layer, their compliance layer, then their audit. So all of them, we have to all work together and continuously try to improve the systems.
So that's the RBI Governor Sanjay Malhotra after the MPC outcome address that he's, post the MPC outcome, and he's addressing the press as well. Clearly what he's indicated is that the global forecast with regards to where growth rate is concerned has come down, and this is mainly on the back of the retaliatory tariffs that we have been looking at. Overall, he's concerned on the tariff impact with regards to growth rather than inflation, and that's an important statement that the governor has made. The government and the RBI are looking to jointly manage the growth and inflation targets and trajectory from here on. And overall, the transmission of policy rate should not be disruptive. He would like the policy transmission to happen as fast as possible, and RBI will intervene if there is excessive volatility in the rupee. However, they do not have a target level and they have good reserves that they are sitting on. That's the word coming in from the RBI governor post the MPC outcome address. But let's quickly slip into a short break. We have lots more lined up on the other side. Stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razor Pay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You know, you're painting a picture of a very typical geek. हम ही कोड बना लेते हैं।
हाँ, why can't I build it? Like मैं बना लेता हूँ यार, simple लग रहा है तो सुनने में।
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120 unicorns that India has, Razor Pay powers almost 105 of them.
Then there is delivery. This stock has also been buzzing in trade. Dealers are indicating that there's a potential corporate development announcement, some acquisition announcement that the company could do when it comes to e-commerce express delivery space. So keep an eye out for delivery as well.
He sold most of his stock, 80%, as on that date. We have requests.
Hello and welcome to NDTV Profit. You're watching Profit Buzzers. I'm Hiral Dadia. In with me is Mika Barve. Mika, good afternoon. An interesting day of trade with the RBI coming out with a 25 basis point rate cut. The stance has been changed as well. And now the clear outlook is in terms of the worry that they have with regards to growth versus inflation. With that little bit of commentary that's coming in from China as well on the back of US tariffs, we'll dive into the same part as well. But let's see if anything on that aspect is having any impact in terms of Indian markets. Let's quickly pull up Nifty 50 on the screens and see what that is doing in trade as we speak. Overall, if you see the Sensex, which is down nearly 200 points. However, you have Nifty, which is holding on above the 22,400 level as we speak. We're still in the red with cuts of around 0.5% coming in there. So a very narrow breadth is what Nifty 50 is trading with. Let's quickly pull up the sectoral indices and then we'll have the Nifty 50 heat map to understand, and then Mika will take us through the broader markets as well. But overall, IT continues to trade under pressure. In fact, you have TCS that will be reporting numbers tomorrow. 2% kind of cuts coming in there. The PSU Bank Index is under pressure as well. And if you talk about the pharma index down in trade, and you're talking about pharma tariffs as well, what's holding up is FMCG, interestingly. So consumption pack is pretty much on the gaining end. Auto is seeing gains of around 0.8% as we speak. And you have oil and gas, which is absolutely on the tender hooks right now. Let's also pull up the heat map in terms of Nifty 50 and see which are the stocks which are gaining and what is putting pressure in trade today. Nestle, HUL, Hero Moto, Titan, Power Grid, few of the top gainers in today's session. Wipro, Trent, Tech Mahindra, Infosys, Tata Steel and L&T, with a Zomato, which is eternal now, is trading with cuts in today's session. Clearly, in terms of broader markets as well, it's an interesting day of trade, Mika.
Yeah, it is. And while the Nifty mid cap is trading with cuts similar to the benchmark, down about 0.4%, it's the Nifty small cap that's feeling the pain, down about 0.8% right now. When you look at some of the counters on the small cap, you have 182 stocks currently declining versus just 61 advancing. Kaplan Point, the top Nifty small cap 250 loser of the day, it's down about 7%, followed by Amber Enterprises. You did see an uptick yesterday, now it's down about 4%. You've also seen some paying in Wellspun Living, E-Clerks, BLS International, Piramal Pharma. All of these counters seeing cuts of 3 to 5%. But there are some counters on the small cap that do have showing gains. Mastech up almost 7.5%. Jyoti Laboratories up 6%. You actually have couple of hospitals and your diagnostic names. I also want to pull up a Dr. Lal Pathlabs up about 4% right now. Narayana Hridayalaya up 3.5%. So while you do have the pharma pack showing some pain here, but your hospitals and your diagnostics are seeing fairly insulated today.
Absolutely. So that's in terms of what the markets are doing. But what's interesting right now is the kind of swings that the Dow futures are seeing at the moment. Though you are seeing that negativity, however, the futures are recovering from the lows, but still in the red. And this is after China has gone ahead and urged dialogue with the US to resolve the trade disputes. In fact, for that moment, Dow futures did turn positive and they are seeing wild swings between gains and losses. China has, however, not announced any rollback of the 34% retaliatory tariffs that it announced last Friday, which will actually come into effect from the 10th of April. While saying that, they've also said that they will fight till the end in its white paper, and they've said that it has abundant means for countermeasures against the US. China has now faces a 104% tariff, including the additional 50% that was announced by Donald Trump last week. In fact, Canada has announced retaliatory tariffs as well of 25% on auto imports from the US. And if you talk about the European markets as well, currently they have opened lower, while if you're talking about the Asian currencies, they also have fallen to a record low during the day. To discuss in terms of what this would mean for the markets, joining us on the show is Peter Maguire, CEO at XM Australia. Peter, good afternoon, and welcome to the show. And it's great to speak to you after a really long time. What do you make of the commentary that's coming out of China? They're urging a dialogue with the USA to resolve trade disputes. However, they're saying that they will fight to the end in the white paper.
Yeah, wonderful to join you on the show. And there is no doubt that it's going to be a very open dialogue between both parties. And I'm not sure how it plays out because it's very much a work in progress to get us to that point as far as where China moves forward and whether there's going to be any compromise from President Trump.
Right. Peter, how open do you think is Donald Trump going to be in order to go ahead with this dialogue, number one? And two, along with the dialogue, do you think it will come to a settlement? Because both of them are going to be at loggerheads.
Yeah, very much so. I think that's where it's at from a loggerhead perspective. I don't think that there's going to be any compromise from President Trump. From what I'm reading, what I understand as far as his market rhetoric, and he is dug in there. He is not going to negotiate unless China really comes back, and it's a level of brinkmanship. And this is very much Trump out of the deal. And he's not prepared to, I think, take a backward step at the moment. So this is where it's going to get very dynamic and very interesting over the next probably 24 to 72 hours, and how that plays into the market as far as volatility and market sentiment.
So, Peter, clearly, China has said that they're open to negotiations. However, they have not announced any rollback of the 34% retaliatory tariffs that were announced last Friday, which actually come into effect from the 10th of April. And if you talk about China, they're facing almost 104% tariff, which includes the additional 50% that was announced by Donald Trump last week. If this continues, who would be the beneficiary out of this, according to you?
I think it's got to be America, because he is going to force manufacturing. Well, this is his ultimate strategy, to force, unless China is prepared to renegotiate on everything, he's going to force manufacturing back home to America that has been based in China, and this is his strategic push. I listened to the likes of Treasury Secretary Scott Bessent, Commerce Secretary Howard Lutnick, and President Trump, and this is the whole mantra that they're discussing. So that's what I'm viewing, and that's what I'm taking on board from a perspective as far as statesmanship and brinkmanship when these geopolitical discussions.
And where are you seeing India placed in this?
Well, I think that there's no doubt India's got a far greater relationship with the US than what China has, and I think that Prime Minister Modi is going to be very engaged with the US, and certainly with President Trump. He's got a wonderful relationship, and I think that it's just very much a work in progress. So I think it's too early to call, but I don't think it's anything like the Chinese situation, and we've just got to see how it eventuates very much over this second quarter.
That's going to be an interesting aspect we should be watching out for. Thank you, Peter, so much for finding the time and joining us on the show and sharing your views. So that's with regards to China, who's urging a dialogue with the US as well. And let's see what happens, because China's retaliatory tariffs actually come into action on the 10th of April, which is tomorrow. We're talking of around 34%, whereas China is sitting on 104%, which includes the additional 50% that Donald Trump had imposed as well. Where this ends is anyone's guess. But let's also look at the India impact now. In fact, Commerce Ministry officials are expected to meet exporters today at around 3 p.m. And this is to discuss measures to tackle the potential impact of US tariffs on India's exports. That is what the agenda is seeming like. Let me head across to my colleague Rishabh for a detailed report. Rishabh, what are you picking up?
Right. What we're hearing from sources is that a crucial meeting between exporters as well as the Commerce Ministry is set to take place at 3 p.m. today. This comes as we're at 9:30 a.m. today. The full effect of the Trump tariffs has taken effect. Remember, Trump had imposed tariffs in two tranches. The first one was applicable at around April 5th, and now the second tranche, the reciprocal bit, is now applicable starting April 9th. So this is now the period of time when sort of exporters start feeling the heat and the effect of the actual tariffs. What we're seeing is that among the key discussion points between the government as well as the exporters could be the potential liquidity crunch that exporters could be facing. It could also be the fact that they would now require access to export credit. And also there is somewhat of a supply chain issue that might come up in global trade, given the sort of hiccups and the uncertainties that are there around how tariffs will play out. What we're also seeing is that the exporters have demanded the fast-track implementation of the of the interest equalization scheme, rather, and that is also supposed to take the burden off exporters in terms of the pressures that they now face what we're also seeing is that they also want the fast-tracked implementation of the export promotion scheme, which was talked about in the budget this year. And that could also be expedited to bring in some relief for these key export sectors that India has, right? Remember, the gems and jewelry sector has come out and said that there will be some sort of pain that they might have to face. The steel sector has been facing some sort of a pain. Engineering goods has also been a crucial sector along with electronics in terms of India's export basket. And if these sectors face some sort of an issue in terms of sending their shipments out to the US, that could lead to India's export numbers being considerably hit. So that is what will be discussed today. We've seen that US's reciprocal tariffs ahead of the deadline. There was already a lot of traffic building up and a lot of cargo shipments heading out to the US before the tariffs hit, in a way to sort of circumvent the impact of these tariffs. And now that these tariffs are actually in place, we're seeing a meeting that is happening, and we will continue to keep tracking this issue, given that it's a fast developing one.
Right. Thanks, Rishabh, for getting us the details. So this is going to be an interesting outcome that the street should be watching out for as well. We will be joined by Gaurang Shah from Geojit to tell us more in terms of his expectations. But before I go to Gaurang, a quick address I want to make in terms of the defense deal that has come in. Let me just quickly pull up the flashes on the screens once again. There's a mega defense deal. The deal is to buy 26 Rafale Marine fighter aircrafts worth over 63,000 crores. That is what has been approved so far. Let's quickly pull up a Reliance Infra, because the Dassault and Reliance JV, which is a subsidiary of Reliance Infra, does manage some of the parts to manufacture the same. There you go. That Reliance Infra stock has climbed to the day's highest levels with gains of around 3% coming in there. So that's the news coming in on this one. Gaurang, a two-part question. One is on the tariffs. Anything that you would have to say, any stocks that you would prefer? I think Gaurang is not able to hear us. Gaurang, are you able to hear me? I think Gaurang does not have our audio. So clearly, Mika, what we need to look at over here is what happens in terms of China and the US if there are negotiations that do come in. And apart from that, what do the negotiations really mean?
Yeah, and there have been talks from an India to US standpoint that we're not going to retaliate and we're looking for a bilateral trade agreement which is expected as soon as August. But let's shift our focus to LT Foods, which is heavily under pressure as a result of Trump's tariffs itself. Let's go to Mahima on how these tariffs are set to impact the company. The stock is down over 7.5%. Over to you, Mahima.
Right, so before I move on to what's causing the fall, and as you rightly mentioned, it's the Trump tariff that is causing the fall in LT Foods. Just a quick view as to how the stock has performed. It has fallen, touched an intraday low of almost 10% in trade today. The stock has fallen 35% from its 52-week high, and it has fallen 15% since 3rd April, that is Trump tariff announcements. In terms of what's causing the fall, Trump tariffs on India will hurt LT Foods, and this is because US market remains a critical contributor to overall LT Foods revenue. As of it generally exports basmati rice, jasmine rice, arbiro rice, and specialty variety of rices to USA. The 9 months FY25 revenue breakup from US is around 39% for LT Foods. So around 39% of the total revenue comes from the USA markets. Around 34% comes from India. The company is also in process of enhancing capabilities in the USA. It also recently expanded its market reach in the USA in the past 2 quarters. The company in its Q3 con call also said that it was anticipating higher demand from USA, and this was before the tariffs were announced. And the company also has a manufacturing facility in Houston, USA. Lastly, in FY24, Royal Basmati was holding around 50% of total market share of USA, which is why the counter is facing significant pressure. Revenues for LT Foods definitely will get impacted, but we'll have to wait and watch out for as to how much of that tariffs is being transferred to the consumer and how it will overall impact their margins as well as bottom line as well.
Thank you, Mahima, for giving us those key details. But on that note, let's slip into a short break, but do stay tuned. Lots more lined up on the other side.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razor Pay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120 unicorns that India has, Razor Pay powers almost 105 of them.
Then there is delivery. This stock has also been buzzing in trade. Dealers are indicating that there's a potential corporate development announcement, some acquisition announcement that the company could do when it comes to e-commerce express delivery space. So keep an eye out for delivery as well.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us.
Hello and welcome to Profit Buzzers. Just before we took the break, we were talking about LT Foods, and I want to welcome Gaurang Shah, Senior Vice President at Geojit Investment Services. Gaurang, how are you viewing an LT Foods? You know, in the first 9 months of FY25, the contribution from US stood around 39%. Any outlook on what changes?
Thank you very much for having me on the show. Good afternoon to all of you. So I think we'll have to wait and watch. Commenting right now when we don't have clarity in terms of what is going to happen in future is going to be extremely difficult. But let me give a prudent disclosure. We have a fundamental coverage on LT Foods. We have an accumulate stance on it, and our target stands close to about 400 as of now. Going into the future, depending upon the earnings and the impact, we might revisit these targets.
Right, you may revisit your targets with regards to LT Foods. So that's the view coming in on this one. But let's shift focus to the banking space as well. Overall, you have Goldman Sachs, which has come out with their report on banking names. In fact, Rahul Jain, head of APAC Financials and India Equity Research at Goldman Sachs, joins in. Rahul, good afternoon and welcome to the show. My first question coming to you is not in terms of what the MPC has done and why, but a 25 basis point rate cut in terms of transmission. How would it augur for the banking counters and your estimates as well?
Great. Thanks for having me on the show, and good afternoon to everyone. Look, I guess this has come along the expected lines. The MPC was expected to cut rates by 25 basis points as per the polls conducted by various agencies, and as per as our house is concerned, we had that view. This clearly would have immediate bearing for the lenders' profitability because a significant part of the lender's portfolio is linked to the repo rates prescribed by the RBI. So you will see reset of the yields happening over the next quarter or so. But having said that, I think what is more important that investors are tracking is how the liquidity is also trending in the market. And we would like to believe that the RBI has taken multiple measures to infuse sufficient liquidity in the system. And also the MPC change the stance today. So that should also be taken into consideration. We believe that the impact of the liquidity surplus will start showing up in the wholesale deposit rates or the money market rates over the period of next few quarters. And that should to some degree negate any negative impact from the repo rates on the yields for the banking system.
I'm taking Rahul. Harsh also joining in. Want to just try and extend that part of the conversation. When does the deposit rate pressure start to ease, in your opinion, given everything that both the regulator has been doing as well as the banking system has been grappling with? What's the sense like?
Great. Look, I guess deposits and the fight for deposit still continues because the loan to deposit ratio in the system still stays at an elevated level. So we believe that, the liquidity measure that the RBI has taken would affect the bulk deposits much more than the retail deposit rates. Retail deposit rates would be dictated by what is the expected rate of return the average saver has, what is happening, to the other investment avenues, what is happening to inflation, etc. So we do expect the retail deposit rates to start trending lower, but it will take at least a quarter or two more for it to start coming down. I think in this cycle, we will definitely see retail deposit rates coming down at a lesser pace versus what the policy rates are, versus the trajectory of the policy rates. So you need to be mindful of that dynamics because the banks are having a tough fight for the deposits, retail deposits in particular. The average growth in retail deposits has been stable at about 11 to 12% or thereabouts. So unless this starts moving up or banks start to see improvement in the loan to deposit ratio, unlikely that the deposit rates would come down meaningfully in contrast to what the policy rates are going to look like. So it's going to be more dependent on the liquidity and its impact on the bulk deposit rates. Retail deposit rates would trend lower versus compared to the policy rates in this cycle.
Right. And Rahul, therefore, what's the impact like on margins? Because one view is margins will continue to remain under pressure. In fact, the pressure will only increase. But if deposit rates were to ease, you could start to see that margins will start to come back also fairly quickly. And just as an extension to that question, which pocket within the space will do better? Private banks, public sector banks?
So, we've just recently put out our note in which we laid out the direction for the margins. We see the margins for the sector bottoming out, sometime in the second quarter of the financial year, and thereafter it should stabilize to move up. There are various factors that drives the margins. Of course, we touched upon the cost of deposits, but also what's happening with the loan book mix, where is the growth coming from, and what happens to the asset quality. And there again, we've also, shared our views with our investors that we believe asset quality will also start to bottom out sometime in the second quarter of the financial year. So if the asset quality starts to bottom out, that will also, start to reduce the pressure on the interest income, plus the loan book mix as that changes more towards the higher yielding loans, and also the cost of fund, which we feel should start to get better in the second half of the financial year. You should see the margin stabilize from the second quarter to slightly improve in the subsequent quarters. Now, within different players that are there in the market, it would really depend on what segment you're operating in and how the competitive landscape is in that segment. So what we are seeing today is mortgage loans is where the rates have taken a bigger knock. The corporate loans have, is a segment where the rates have been under pressure. But outside of that, unsecured loans have, the competition has slowed down there. So the players who are exposed to, let's say, the unsecured segment or the commercial retail segments, subject to how the asset quality is panning in these segments, they should be able to do better over the next couple of quarters. So therefore, I think in general the margins will bottom out in the second quarter onwards, and then wherever these profit pools are starting to pick up, the players who are exposed to these profit pools will tend to benefit.
So Rahul, a question in terms of where the credit growth goes. The anticipation was that it will remain sluggish with regards to FY26 as well. Now with rate cut that has come in, which obviously the markets are pricing in, how do you see the movement in terms of credit growth, and who could be the beneficiaries according to you?
So look, the credit growth has been under pressure through the last financial year, and part of it actually was by design. The regulators did see the heating up of certain loan segments, such as unsecured loans or the credit to the NBFCs, and hence the increase in the regulatory risk weights on those segments. So part of it was design, part of it was due to the slowdown of the economy. But now as the economy starts to stabilize, of course, subject to what happens in the global trade dynamics due to the tariffs, we do see the credit growth to start stabilizing from this year. Our projections for the banking system's credit growth is between 10 to 12%, depending on where the economy goes in the second half, and then we'll see what happens to the credit growth. But really speaking, if you were to look at the segments that drives the credit growth in the system, we can bifurcate those into three segments. One is the household, which is having a higher leverage in this cycle, so that will take time. On the corporate side, the private capex activity is slower. We are seeing some early green shoot, but still difficult to call out to what degree it will contribute to the credit growth in the system. And third is the demand for working capital, which is also linked to the commodity prices, etc. So I think it would be safer to assume that the credit growth in this year will likely to stay in a tight band close to 10 to 12%, which is where it is right now. And then maybe in the following years, as the household balance sheets start to get better, or there's some activity on the corporate capex side, we should see that picking up. I would also be quick to add that there are certain segments where the volume activity has slowed down, particularly let's say in mortgages. Certain pockets have seen a slowdown. But look, there is an income tax cut also that the government has given out. As that starts to benefit households' income levels, we should see the activity levels coming back. So I think first half will be a slower period. Thereafter, we should start to see some activity. And then next year, depending on how the household balance sheet shape up, we will see a momentum in credit growth. All of this to some degree is also dependent on what happens to the global trade and to what extent the Indian businesses be impacted by that.
Got it. Thank you, Rahul, for joining us and helping us and the viewers get a better perspective about this. And we hope to speak to you soon.
Thank you.
On that note, let me welcome Gaurang Shah again, as well as Brijesh, retail research at IDBI Capital. Gaurang, I'll come to you first. Your outlook on the banking space, any counters that stand out?
Well, not only one, but one too many, both in private and as well as public. And I would go to the extent to say that if you have a portfolio, I think it's prudent to have banking and finance as an integral part of your portfolio. Expect earnings to have much more strength going forward on fallback of credit demand, loan book growth. Asset quality is improving both on gross and net NPA front. Provisionings are coming back. Interest rate cuts augurs extremely well for loan offtake. So we have both public as well as private sector banks, and I think even strong NBFCs should be a part of your portfolio.
Got it. Brijesh, what about you? Any counters that are looking attractive on the charts at current levels?
Hi, good afternoon. So maybe possibly we can keep a watch in Kotak Bank and IDFC first. From the derivatives point of view, the structure is positive, and there has been a consistent long build up over the last 5 trading sessions. So I believe that momentum can be there in the IDFC first. We can talk of 65 to 70 levels on the higher side, maybe during the month, and Kotak maybe somehow close to 2150. So the view is positive on the banking space.
With regards to banking counters, let's quickly pull up an AFL on the screens and see what's happening to that counter. Stock has been trading under pressure at the day's lowest levels with cuts of 4.5% coming in there. What's interesting is two brokerage houses which have an upside and a buy recommendation, but I think it's the entire IT pressure that's having an impact on this one. Puneet joins us to tell us more. Puneet, a drop in spite of the buy recommendations.
Well, definitely, and there's been some very positive commentary by the company yesterday in its analyst meet. They have mentioned that they're looking at revenue growth of almost 10 times over the next decade or so. So definitely some very positive updates on that. They've also mentioned that revenue growth will be driven by Gen AI as well as connected AI devices and TV product initiatives that the company has taken. Apart from that, they mentioned that they are planning to leverage and expand its advertising client base effectively in SMEs going forward. So that's a positive, and that positive view has been taken because they also put three key initiatives in focus. The first one's the Optics AI company, which is Gen AI based creative development fertilizer. That's for the advertisement development, and that's one of the key verticals according to the company. The other ones for their TV advertising for SMEs, as I mentioned, and the last one's the AI vertical, which has 100 new AI agents to be integrated within various workflows, which will be for a corporate entity essentially. Now, Citi had mentioned that they are seeing a 31% upside from its previous close target price of 1920 rupees per share, and they mentioned that while majority of the international business is through its subsidiary, they don't have that much of an export component, so wouldn't be directly impacted because of the tariffs, but of course there's an indirect impact because of the clients. They're also seeing that there is no tariffs currently on any kind of digital advertising, as I mentioned, but they are seeing a secluded negative impact because of the indirect impact of tariffs. Elara also maintaining 37% upside with the buy recommendation target price of 2,000 rupees per share. And there are a couple of points that they're making. They're saying that the cult of branding along with the conversion shall start to yield results for the company going forward, and they are seeing that it's one of the top picks in the internet space, valued at 45 times price to earnings for FY26. So definitely watch out for this counter. A really strong commentary coming from the management, and brokerages are giving that upside as well on the stock.
Got it, Puneet. But stay with us because Info Edge has also been under pressure today after posting its quarterly numbers. Brokerages have offered mixed views as well, with JP Morgan particularly being positive on the counter. Puneet, could you break this down for us?
Well, during market hours yesterday, we did see the Q4 update come in terms of billing. So that's definitely been a very strong number for Q4, 19% growth in billing at 984 crores for the company on a year-on-year basis. We've also seen the standalone billing for the FY25 come in at a 15% growth, close to 2,881 crores. Now, the recruitment solution business has shown a surprise upside in this particular quarter, 18% growth. The same growth is seen in 99 acres as well, which is the real estate business of the company. But that is, of course, at a very low base at 159 crores. Now, JP Morgan, as you rightly mentioned, is positive. Target price of 8,900 rupees per share. They've said that the business Naukri.com has done very well and has beat, as well as the billings beat, as well as acceleration going forward. They've said that the only concern is the IT slowdown. This is a major hiring from the platform of Naukri.com, but they believe that Info Edge is a better play in the IT pack rather than the conventional IT names, and hence their positive outlook. They also mentioned that half their business is coming from non-IT space, so that should cushion any kind of slowdown going forward. On the other hand, Macquarie, it's maintaining its underperform rating with a target price of 5,200 rupees per share, and they are saying that essentially they don't see an expansion in hiring activity because of the slowdown in IT, and they are mentioning that AI could have a negative impact going forward as well. But overall, mixed brokerage views, but the majority of brokerages have mentioned that the slowdown in IT could be one of the key triggers to watch out for going forward as well on the negative side.
Right, so that's with regards to Info Edge as well as Affle. Gaurang, Info Edge, Affle, your views?
Well, so Bill, I would give comments on Affle because we don't have coverage, but Info Edge we definitely have coverage, and our targets are in excess of 7,500 from a long-term point of view. I think all these IT related, companies should possibly have some short to medium-term headwinds, but long-term we remain positive.
Rajesh, what are charts indicating on both these counters? Because Affle, in spite of positive brokerage view, stocks are trading in the negative.
So basically, from the technical point of view, there has been distribution, and the weekly and the monthly structure for the Affle is not very good. So maybe a bounce back close to 1,500 will see a resistance. So not too much on at the current levels, maybe some bounce back, but then that is to be, I believe that will get sold off. So it's a cautious view as of now, and specifically for the Naukri, I think InfoEdge. I think technically there is some divergence which I can see, and most probably this the recent low of 6,000 will be protected. So I think maybe one can keep accumulating at the current price, and maybe gradually it can pick up. But 6,000, the level which we saw on the panic day, I think will get respected, and slowly we can keep buying at this range.
Right, so that's with regards to InfoEdge, but let's quickly pull up a Senco Gold on the screens and see what the stock is doing in trade. Locked in upper circuit, and this is after the company has guided for a robust first quarter of FY26. In fact, the volatility that we've seen in terms of gold prices in the fourth quarter, that has led to an increase in terms of old gold jewelry exchanges. You have old gold, which contributes almost 40% to the overall sales of Senco, and 61% comes in from the non-Senco customers in FY25. Earlier the month, if you talk about gold prices, they've surged to a new record of almost $3,167 per ounce. Now, the key question is this the start of a glittering turnaround for a Senco Gaurang?
Well, it looks a little bit difficult one because honestly, this company came out with an IPO in the price band of 301 to 317. This is way back in July 23, Hiral. And even today, the stock price, of course, we've seen correction in the market, not to rule out, but it is at 318. Now, if I want to pick something in the gems and jewelry pack, first of all, I think if you're going to put your investment and your thesis is gold, then it is better to opt for gold ETFs or gold mutual fund because you're taking a direct exposure on the precious metal. You are bypassing or mitigating the corporate related issues like we faced early this morning because of the statement made by the RBI governor. You saw selling across all the gold loan finance companies. So that's my view. Okay, if you want to stick at gems and jewelry, then I think the best company suited is Titan Company, on which we have coverage. It has got diversified business. It's got gem and jewelry. It's got wristwatch. It's got eye care. It's got perfumes. It's got high-end platinum jewelry in form of Carrot Lane, which they acquired.
Gaurang, Brijesh, I'll come to you. How does Senco Gold look on the charts? Because, in the past month itself, you've seen the stock hit upper circuits quite a few times. Is there any runaway left for Senco Gold, or do you prefer another jewelry counter?
No, Senco, we can have some view, but the time frame would be a bit difficult to judge because I believe there is some kind of accumulation which we can see at the bottom level. The bounce will be a very small kind of a bounce, not too much of on the aggressive on the higher side. I do like to go with the Titan as a specific stock. Senco also can see some momentum trade, like 340, 345 can be the immediate upside, but not too much on the higher side. Titan would be your best bet to keep a watch on.
Regards to Titan, which is nearly at the day's highest levels as we speak. But let's quickly pull up a Home First Finance as well. That stock is in focus on the back of the QIP launch. Now, the company is looking to raise almost 1,000 odd crores. Stock seeing gains of around 2.5%. It has cooled off from the day's highest levels. Harsh is getting us the details. Harsh, over to you.
All right. So Home First Finance, it's about to raise capital of around 1,000 crore, and there's an optionality to raise another 250 crore. It's a QIP. The issue price is roughly between 968 rupees and 988 rupees. It's around a 2% discount to yesterday's close, but today the stock has of course perked up in trade. In terms of the SEBI floor price, it's at 1,019 rupees per share. If this is the band in which the issue actually goes through, it will mean a valuation of around 3.7 times price to book current and 3.2 times price to book 1 year forward. That's one piece for perspective. With regard to launch, Tuesday was when the QIP was launched. The settlement date will be the 15th of April, and the listing and trading of shares will commence on the 17th of April. So those are dates you want to keep on your radar. Now, in terms of capital adequacy, very healthy capital adequacy already that Home First enjoys. 33.1%, but it's a fast growing sector, and this indicates to a certain extent the willingness of the company and management to continue to drive growth.
Got it, Harsh. Thank you so much for giving those details. But on that note, Brijesh, Gaurang, thank you so much for joining us on this show. And with that, it's a wrap on this edition of Profit Buzzers. But do stay tuned to NDTV Profit. Lots more tuned up on the other side.
That's huge. That is a biggie. It's on
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You know, you're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. इतना simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
We want to be the de facto platform for startups to accept payments. Out of 120 unicorns that India has, Razorpay powers almost 105 of them.
Then there is delivery. This stock has also been buzzing in trade. Dealers are indicating that there's a potential corporate development announcement, some acquisition announcement that the company could do when it comes to e-commerce express delivery space. So keep an eye out for delivery as well. Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, Anushi, we have recovered a bit from the day's lowest point, but we continue to hover around the 22,400 level.
Right. So what we are seeing in terms of Nifty 50, a lot of focus in terms of where the economic data is concerned. We have seen RBI cutting the repo rates by 25 basis points. This was against, this was widely as per expectations that what we were seeing. In fact, what RBI has also done is it's changed its stance to accommodative from neutral, which was not along the expected lines that we've seen. The focus mainly was on the central bank soon coming out with a comprehensive guidelines on the gold loans segment that has witnessed quite a crucial growth in terms of where the last year levels are concerned. So gold loan rules are likely to be tightened is something that is the expectation of the governor that we are seeing. Currently, if you are seeing Nifty 50, where that is, we are looking at cuts of around 0.5%. Nifty at the levels of 22,400 is something what we are seeing. In fact, let's pull out the contribution table to see which are some of the gainers and the losers in the day currently that we are looking at. All the IT names at the front that we are seeing. Infosys is in focus currently. HDFC Bank, L&T, other stocks in pressure over here, whereas the defensive pack, if we are seeing HUL, Nestle, ITC are in the green is what we are seeing in terms of where the broader, in terms of where the benchmark index is concerned. If you look at the Nifty Bank, let's pull out the Nifty Bank index also to see how that is faring in trade currently. Doing particularly, I was seeing cuts of around 0.5% here as well. So this is in terms of where the benchmark index is holding up. In terms of where the Nifty Mid Cap 150 is and Nifty Mid Cap Small Cap 250 is, we are looking similarly as per what the benchmark indices are doing. Broader markets also seeing around 0.5% cuts over here as well. Some of the top names that we can see in terms of where the Nifty Mid Cap 150 is to see the top gainers in trade over here, if we can pull that out as well. For the Nifty Mid Cap 150, the top gainers in this space, we are looking at names like Max Health, HPCL and Marico gaining in focus, seeing gains of around 4%, something like Escorts, Colgate and IDFC First also in focus. In fact, if you are seeing Nifty Small Cap 250, we're also seeing a couple of other names in focus with the likes of Crompton as well. So this is overall chart that we are seeing. Jyoti Labs up around 6%, Dr. Lalpath 4.9% of gains. However, in the red, we are seeing Kaplan Point, Ipca Labs and Muthoot Finance down in red, seeing 7 to 6% of cuts. In terms of where the sectoral breadth is concerned, Nifty FMCG, the top gainer for the day, was seeing gains of around 1.65%, followed by Nifty Consumption and Nifty Auto Pack. Whereas in the red, we are looking at Nifty PSU Banks, Nifty IT and something like a Nifty Metal. So those are seeing cuts of around 1.4 to 1.9% each. So this is the overall picture that we are looking in terms of the benchmark, the broader market and the sectoral indices are there. But RBI Governor Sanjay Malhotra said that the central bank would change its stance from neutral to accommodative, and this is good news because it means that the bank is open to more rate cuts in the future if the global situation demands it. Listen in to what he had to say.
In our context, the stance of monetary policy signals the intended direction of the policy rates going forward. Accordingly, with respect to the policy rate, which is the mandate of the MPC, today's change in stance from neutral to accommodative means that going forward, absent any shocks, the MPC is considering only two options, that is status quo or a rate cut.
Well, gold financiers like Muthoot Finance and Manappuram Finance will remain in focus on the back of the commentary that has come in from the RBI Governor. What's the impact of the same? Let's get in Harsh to get in more details on the same.
Well, some choppiness in gold lenders, and that's because we had the RBI MPC today, which said that they're going to issue comprehensive regulations on prudential norms with regard to gold loans. This was largely read negative by the street, even though we've come out and the RBI has clarified thereafter that they don't intend to tighten norms per se. So no tightening expected with regard to gold loan norms. Companies affected, well, you have a Muthoot, you have Manappuram, of course, the primary NBFCs in the gold loan space, a CSB Bank, a Capri Global, an IIFL, a Federal Bank. All of those also have a healthy share of gold loans, anything between 18 to around 45 odd %, which a CSB has. So all of those will likely get affected. You'll want to watch out for this space, of course, in terms of how tight the norms get. But my reckoning would be that you would not see an impact on the lenders which are doing well in terms of processes. So that will probably be the skew. If you're not doing well on the process front, yes, you will be impacted, and therefore lenders which are doing well on the process front may actually benefit from this. You want to watch out for this space as and when it unwinds. Of course, we'll keep you updated.
Well, gold financial names, as Harsh mentioned, were in focus, something like Muthoot Finance and all currently down in trade is what we are seeing. But other back that is in focus is something like the CGDs, and this is on the back of some price hikes that we have seen along with some other developments in terms of whether crude prices are concerned. Samit, what can you tell us more about this? What is the current outlook and what is the expectation going forward for the same?
Well, if you look at city gas distribution companies, a lot of news has been buzzing. There has been multiple price hike that has been taken by Mahanagar Gas and IGL as well. But what is more important now for going forward for both these city gas distribution companies like IGL and MGL is the potential gas price cut that could come in from May 2025. Now, why this gas price cut could come in? Because crude prices have fallen significantly from $75. Now we are seeing crude prices hovering around the $60 to $61, $62 per barrel mark. Now, because of this, if you look at the current APM gas prices, they are at around $6.75 per barrel, which was notified by the government few days back. And based on current crude prices, if you look at, that is around $61. The gas prices should be at around $6.1 per MMBTU. Now, why is this? Because the Kirit Parikh committee had clearly indicated that the domestic gas prices or the APM gas prices will be linked to crude prices, which will be 10% of the crude prices, which means that if crude is trading at around $65 per barrel, then gas prices would be at $6.5 per MMBTU. And if crude is at $61 per barrel, then APM gas prices would be at $6.1 per MMBTU. Now, who would be the biggest beneficiary if there's a potential gas price cut that could come in going forward? IGL and MGL are expected to be the biggest beneficiary of this, and this is because IGL and MGL get nearly 50 to 52% of the gas requirement from the APM gas, and a reduction in the APM gas prices would actually lead to some margin benefit for both these companies. Now, generally, if you see, every $0.25 per MMBTU drop in the gas prices or in the gas cost reduces or increases their margin, in fact, by around 0.6 rupees per SCM. Now, this 0.6 rupees per SCM is nearly 10% of IGL's 9-month FY25 unit EBITDA, and it's nearly 6% of MGL's 9-month FY25 unit EBITDA. So, it could be a significant benefit coming in for IGL and MGL going forward if there is a cut in the gas prices, and most likely this will happen given the fact that we have seen a significant fall in the crude prices. Now, this reduction in gas prices plus the recent price hikes that MGL and IGL have announced of around 1 to 1.5 rupees per kg on the CNG segment could definitely benefit the margins in FY26, because in past also we have never seen that a price hike has impacted any demand for a CNG. So no demand impact coming in from price hike plus cost coming down, and both these factors could lead to higher margins for the city gas distribution companies in FY26. Well, let's also welcome in Sneha Poddar, the Vice President Research of Wealth Management, Motilal Oswal, to get in more details on this. Sneha, have you tracked the city gas distribution companies, and do you see things to improve for them going forward, given the fact that crude prices have come down, which could also lead to lower gas sourcing costs for them?
Yes, in fact, we are turning quite positive, and recently only we released a note that things seems to be bottoming out for the city gas distribution companies. So definitely there will be a benefit because the raw material cost will come down for them, and moreover the competitiveness gap which had reduced with the other oil components like propane and all. That is expected to again widen, and probably that will again lead to shift in the volume from propane and other gases to PNG. So, city gas distribution companies would stand to benefit in that case. Moreover, the overall demand was quite subdued, which now, some green shoots are available, and there are hopes that the volumes can revive from here. So, both on the pricing front as well as on the demand front, things are looking a little bright, and thus the valuations are really very attractive, and they are trading roughly around 10 times 1 year forward earnings. So the valuations are pretty attractive, so one can actually start accumulating them at these levels.
Okay, so that's the outlook for the CGDs that we are looking at. But Coming back to what Harsh was talking about earlier was the gold financials. Now, what we've seen is that the central bank is soon expected to come out with a set guidelines for some of these gold loan segment. Now, we have seen gold prices have witnessed explosive growth in this last 1 year, and there are expectations that these loan rules are going to be tightened by the regulator going forward. So, Sneha, a couple of these names, want to understand your outlook on this particular sector. We are currently seeing the stocks like Muthoot Finance, Manappuram Finance under pressure. What's your outlook on the space?
I mean, we have been quite positive on this space. Now, obviously, whenever the regulatory changes come in, the stocks do tend to go in pressure. So there would be some phase of probably consolidation. We'll have to actually wait and watch what exactly the regulatory changes come in. If the regulatory changes, if the policies are tightened up, then probably it can reduce the competition from the banks which had increased of late, and probably that could be a blessing in disguise also for the sector. We really don't know. So let's wait for the final details. But what I believe is that this space is interesting, and it holds a lot of potential. It is almost it's a completely secured space, and there's less risk in terms of the collaterals not being there. So one can actually though we might see some sort of consolidation over in the near term, but then from a long term perspective, one can actually take this as an opportunity to re-enter into this space and build a portfolio.
Right. Another stock that remains in focus is LT Foods, and the stock has been under pressure as the stock faces heat from Trump tariffs. Let's go across to Mahima to get in more details on the same.
Right, so before I move on to what's causing the fall, and as you rightly mentioned, it's the Trump tariff that is causing the fall in LT Foods. Just a quick view as to how the stock has performed. It has fallen, touched an intraday low of almost 10% in trade today. The stock has fallen 35% from its 52-week high, and it has fallen 15% since 3rd April, that is Trump tariff announcements. In terms of what's causing the fall, Trump tariffs on India will hurt LT Foods, and this is because US market remains a critical contributor to overall LT Foods revenue. As of it generally exports basmati rice, jasmine rice, arbiro rice, and specialty variety of rices to USA. The 9 months FY25 revenue breakup from US is around 39% for LT Foods. So around 39% of the total revenue comes from the USA markets. Around 34% comes from India. The company is also in process of enhancing capabilities in the USA. It also recently expanded its market reach in the USA in the past 2 quarters. The company in its Q3 con call also said that it was anticipating higher demand from USA, and this was before the tariffs were announced. And the company also has a manufacturing facility in Houston, USA. Lastly, in FY24, Royal Basmati was holding around 50% of total market share of USA, which is why the counter is facing significant pressure. Revenues for LT Foods definitely will get impacted, but we'll have to wait and watch out for as to how much of that tariffs is being transferred to the consumer and how it will overall impact their margins as well as bottom line as well.
Well, Sneha, how are you looking at LT Foods? Do you believe that the company has the pricing power to pass on the tariff impact to the consumers in the US market?
Okay. LT Foods will be looking at passing on the the impact of the tariffs to the consumers. But more so importantly, what we will be actually watching out for their strategy in terms of diversifying away from US to other global markets, because currently US is a significant export market for India, and now India has to look out for other markets in order to reduce the reliance on US, because margins in the exports is much higher compared to the domestic market. So obviously they will keep their export to domestic mix somewhat stable, but till the time they're not able to diversify that, there will be some sort of pressure, because the passing of the price hikes will also take time to actually reflect. So there'll be 1-2 quarters of pain period for the company before the complete pass through can be done. So yes, the stock will remain under pressure for some time till the dust settles over this.
Okay, stock likely to remain under pressure is the view that Sneha has for LT Foods. But another stock which is also in pressure is Info Edge, and this is after it posted its fourth quarter numbers. Brokerages offered mixed view, with JP Morgan particularly being positive on the counter, whereas if you look at Macquarie, they have maintained their underperform rating. My colleague Puneet joins in with a detailed breakdown on this. Puneet, what can you tell us about Info Edge?
Well, during market hours yesterday, we did see the Q4 update come in terms of billing. So that's definitely been a very strong number for Q4, 19% growth in billing at 984 crores for the company on a year-on-year basis. We also seen the standalone billing for the FY25 coming at a 15% growth, close to 2,881 crores. Now, the recruitment solution business has shown a surprise upside in this particular quarter, 18% growth. The same growth is seen in 99 acres as well, which is the real estate business of the company. But that is, of course, at a very low base at 159 crores. Now, JP Morgan, as you rightly mentioned, is positive. Target price of 8,900 rupees per share. They've said that the business Naukri.com has done very well and has beat, as well as the billings beat, as well as acceleration going forward. They've said that the only concern is the IT slowdown. This is a major hiring from the platform of Naukri.com, but they believe that Info Edge is a better play in the IT pack rather than the conventional IT names, and hence their positive outlook. They also mentioned that half their business is coming from the non-IT space, so that should cushion any kind of slowdown going forward. On the other hand, Macquarie, it's maintaining its underperform rating with a target price of 5,200 rupees per share. And they are saying that essentially they don't see an expansion in hiring activity because of the slowdown in IT. And they are mentioning that AI could have a negative impact going forward as well. But overall, mixed brokerage views. But you know, the majority of brokerages have mentioned that the slowdown in IT could be one of the key triggers to watch out for going forward as well on the negative side.
Okay, thank you, Puneet, for all those details. Sneha, coming to you for something like Info Edge. Now, Puneet emphasized on the point of the current slowdown that the IT sector may face. What is your outlook on this counter, and how would the slowdown in IT sector impact the company's growth potential forward?
So as rightly mentioned, definitely the impact of slowdown in IT will impact the overall billing for Info Edge. See, Q4 has been good, but then the outlook is quite uncertain with like not only the IT sector, in fact, given the overall global uncertainty that we're witnessing, so the hiring can be seen affected across the sectors. We really don't know which sectors actually stands to benefit. So probably few consumption-driven sectors there, the hiring might not be like, might not face slowdown, but any export-related sectors, the hiring might get impacted. So though Info Edge has diversified away from IT, and like almost 50% comes from non-IT, but still there is a lot of risk because IT, there's clear-cut indication that the hiring may get impacted. In the non-IT verticals also, there will be some verticals where there could be some impact. So my suggestion would be to actually not go overboard on this counter till the clarity emerges. And as a house, we have a neutral view on the stock with 7,100 as a target price.
Well, IIFL remains the other stock that in focus is down around 3% after the company conducted its analyst meet. What were the key takeaways and what are brokerages saying about the same? Let's get in Puneet with more details on that.
Well, definitely, and there's been some very positive commentary by the company yesterday in its analyst meet. They have mentioned that they're looking at revenue growth of almost 10 times over the next decade or so. So definitely some very positive updates on that. They've also mentioned that revenue growth will be driven by Gen AI as well as connected AI devices and TV product initiatives that the company has taken. Apart from that, they mentioned that they are planning to leverage and expand its advertising client base effectively in SMEs going forward. So that's a positive, and that positive view has been taken because they also put three key initiatives in focus. The first one's the Optics AI company, which is Gen AI based creative development fertilizer. That's for the advertisement development, and that's one of the key verticals according to the company. The other ones for their TV advertising for SMEs, as I mentioned, and the last one's the AI vertical, which has 100 new AI agents to be integrated within various workflows, which will be for a corporate entity essentially. Now, Citi had mentioned that they are seeing a 31% upside from its previous close target price of 1920 rupees per share. And they mentioned that while majority of the international business is through its subsidiary, they don't have that much of an export component, so wouldn't be directly impacted because of the tariffs, but of course there's an indirect impact because of the clients. They're also seeing that there is no tariffs currently on any kind of digital advertising, as I mentioned, but they are seeing a secluded negative impact because of the indirect impact of tariffs. Elara also maintaining 37% upside with the buy recommendation target price of 2,000 rupees per share. And there are a couple of points that they're making. They're saying that, the cult of branding along with, the conversion shall start to yield results for the company going forward. And they are seeing that it's one of the top picks in the internet space, valued at 45 times price to earnings for FY26. So definitely watch out for this counter. A really strong commentary coming from the management, and brokerages are, giving that upside as well on the stock.
Sneha, do you happen to track Affle and any recommendations on that counter?
No, we don't track Affle.
Right. Well, a host of other stocks that have been buzzing in trade, a few of them tend to be Muthoot Finance, Glenmark Pharma, PB Fintech, Biocon. In fact, IT stocks continue to remain under pressure. We have TCS that will be reporting its numbers tomorrow. Sneha, any view on TCS earnings, and how are you looking at the IT sector earnings?
See, IT sector earnings are expected to be weak. In fact, the managements had indicated that in the Q3 con call itself. So the numbers, there are no doubt that it will be weak. TCS would be relatively better placed compared to the entire IT pack. Now, in terms of expectation, what we are really expecting is that in case of TCS, we might see a flattish or a slight decline on a QOQ basis, whereas but relatively it's better off in case of other place. And in terms of the overall the margins, just
Yeah, right.
so in case of the margin decline will be there, but in case of deal pipeline, that is expected to be healthy. And with regards to BSNL, obviously there'll be very little contribution in this quarter, but from FY26, ideally it's expected to pick up. So any indication on that front from the management will be very critical. The margins are expected to be flat. But very important to track will be the outlook with regards
Sneha.
to the IT sector.
Yeah, well, that's the view that we are seeing for the overall IT space. Thank you, Sneha, for joining and sharing your views on several of these counters. But that is all the time that we have on this edition of Profit Top Trades. Stay tuned for India Market Close coming up next.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. what we were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही code बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार, simple लग रहा है तो सुनने में.
Those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120 unicorns that India has, Razorpay powers almost 105 of them.
Then there is delivery. This stock has also been buzzing in trade. Dealers are indicating that there's a potential corporate development announcement, some acquisition announcement that the company could do when it comes to e-commerce express delivery space. So keep an eye out for delivery as well.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Welcome to India Market Close here on NDTV Profit. I'm Harsh Saita. With me is Neeraj Shah. Tempered reaction is what the Nifty has seen since the start of today. We've been trading in a narrow and a tight range, but 22,400 at least at the moment being held. 0.5%-ish lower. The Nifty Bank also largely trading in line with the Nifty 50 index. So that's how we can sum it up. Let's look at the intraday chart on the Nifty. Thereafter, look at the heat map as well. There you go. You can see that little bout of volatility at the start, but thereafter we've traded in a fairly tight band in that sense, around 130 odd points lower versus yesterday. We hit a low of 22,353 and thereafter we've bounced back around 40 to 50 points maybe, and even from the highs it's just about 50 to 60 points. So very, very tight. Maybe 100 odd point band is what we're trading. Let's look at the heat map on the Nifty, and certain pockets doing well. FMCG surely, a little bit of auto also there. A power grid shining on a day like this, and Reliance slightly, mildly in the green. That's how it's getting played. What's not doing well? Wipro, and within the IT pack, that's one of the top laggards. But even otherwise, IT seeing some bit of brunt along with maybe an L&T. A Trent continues to see pressure, and some NBFC names which are seeing a bit of a correction after the kind of zing we saw on some of those counters yesterday. So, and if we can pull up the contributors as well, we likely see similar kind of a texture. Some of the heavyweights packing a punch on the negative side, but nothing material per se. But even on the positive, we are seeing a lot of FMCG names there. Let's look at the advanced decline, and maybe then I hand it over to Neeraj. The advanced decline, again, not as bad, frankly. After the kind of sell-off that we saw globally, Neeraj, this advanced decline doesn't look as bad, and the texture of the market looks okay.
Yeah, you could argue that it's just about 1% down for the small cap index, so bear that in mind. Now, I don't know whether we can pull up the European markets right now. We can show you the US futures right now or no, but we pertinent to just just tell you at least what's happening with the world market. So European stocks are down between 2.5% to 3%, and which is why Harsh was saying that relative to the markets world markets, we are doing okay. China has said that it will continue to take resolute and forceful countermeasures as US tariffs kick in. So I think this is some telling statements being made, so keep that in mind. And relative to the world markets, we are doing much better. What's not doing well though? Car trade 10% lower, Goldem about 10% lower. There is weakness in Sharda Cropchem about 7.5, 8. Some pharma names, so Themis Medicare, Wokhard, Marksons, Glenmark, all of them down. Muthoot is down. Yesterday's big winner, Deep Industries, is down in the oil and gas space. But essentially, pharma is one key culprit in the session today at the broader end of the spectrum and in the large cap space as well, by the way. What's doing well? A few. Huhtamaki in the green marginally, ITI, Team Lease, KSB. Not too many winners, unfortunately. Therein lies the problem. Harsh, factors to watch.
Yeah, absolutely. Let's first start off with the Nifty range-bound day of trade. That's the first takeaway from everything we've been speaking about. Let's talk about some sectors which are doing well. Nifty Auto is in the green, one of those sectors. IT, PSU banks see pain. They're the top two losers, 2% plus lower. Broader markets are underperforming slightly, and you're seeing the breadth, which is weak, but not as weak. Let's also pull up the sectoral heat map if we can, and get that sense as to how it's all coming together. There you go. So FMCG, auto in the green, PSU banks, IT, metals are some pressure pockets in the market. Pharma also down 1.6. That one also in focus on the back of everything that Trump has been saying. Neeraj.
Okay, let's try and understand how to approach trade in the near to the medium term. Shivangi Sarda, analyst, equity derivatives and technical, and Motilal Oswal Johnson right now on the show. Shivangi, great having you. Thank you so much for taking the time out. What's the mood currently, Shivangi? Are you advising and are people taking large trades, considering that there are two key factors? One, the markets are very choppy, and two, we have a holiday tomorrow and we have a holiday Monday, both of which days the global markets are on.
Absolutely. Very good afternoon. Thank you for having me. So we've seen that there has been quite a lot of volatility that we are pertaining into. And, looking at the indices, of course, after the 2 days recovery, we've given up again today. We are into a little bit of a consolidative mood, but the call writers have positioned themselves, which makes the upside capped. Now, again, we are witnessing some sort of a relief at 22,350 on an intraday basis for the expiry day POV, but overall upside remains capped, and we might just get into a very lackluster move in the last hour of the day. But overall, positionally, if we look at next week as well, we are looking at 22,222 as a major make or break zone over here for Nifty, which will decide the decisive trend which it's holding for the upside or not. And on the upside, of course, hurdles are intact at 22,500. But there is a lot of unwinding needed for this to next again rally up to 22,715 marks. But overall, looks quite volatile for the next 10 days, of course, and we would be seeing some sort of volatility which can't be ruled out till the time India VIX again cools off below 16 to 15 levels. So of course, traders are advised to have a hedge strategy, reduce overnight, positions as the risk that you pointed out. And of course, looking at the long weekends, we are also looking at aviation stocks, which are looking quite positive.
Aviation stocks are it's interesting today morning, and of course Chandan had a long call. I think Milan Vaishnav had a long call. Shivangi, are you still going long on Interglobe Aviation despite the market?
Absolutely. That has been one of the stocks that has remained resilient in such kind of a market. And we've seen that there has been excellent follow-up buying even after the breakout. And the way volumes have also risen, which confirms that, after the breakout of the consolidation of the last 13 days, this stock is still gearing up for like a more up move. And the remarkable point is that even in such a high market scenario where the volatility is such high, this stock has been quite resilient. So we're looking at 5,400 next for Indigo with a stop loss of 5,100 levels.
Okay, point taken. What's the view, Shivangi? Harsh also joining in with something like an FMCG, which is doing very well in a market like this. Is the tide turning, at least with regard to domestic facing sectors and segments? Is that how one should read this?
So FMCG, we could see that, the demand trends have been consistently stable over the last few quarters. And in fact, this has been one of the defensive bet in such kind of a market volatility and scenario. So overall, looking quite positive. In fact, the heavyweight stocks are also, looking quite lucrative at these levels. But on my radar, of course, from the consumption pack is Tata Consumer, which from the last 4 weeks has consistently shown long built up. And we've seen that a lot of IVs have cooled off over here, which clearly gives a comfort to the bulls. 1,075 used to be a previous rejection zone, which this stock has surpassed and holding very comfortably above those levels. So recommending a buy here with a target of 1120 levels and a stop of 1,060 zone.
Shivangi, and therefore brings us to your second pick within the FMCG space. Tata Consumer. Okay, believe that that's already been covered. Okay, thank you for that, Shivangi. Actually, what we'll do, Shivangi, is just quick 1 or 2 questions with regard to a couple of movers. How do you look at something like capital market plays, something like a 361? How do you look at a Nuvama? Some of those names?
Of course, capital market stocks are looking quite positive. These are a portfolio must-haves, but on the immediate basis as well, if we talk about some of these stocks, they have been witnessing some buying interest from the last 1 week. Of course, all the disclaimers and disclosures applied. Looking quite positive is BSE at the moment, which has retraced exactly from its 50 daily exponential moving averages. And RSI has also, shown some signs of relief here. So BSE is looking quite positive, even in, we've seen that the Demat account has been consistently increasing on a month-on-month basis with SIP flows flowing into. And this stock has been a portfolio one, a wealth creator one as well. So both the trading and investment pick, BSE is looking quite positive right now. Immediate basis, we could look at 5,800s for BSE with a stop of 5,450 level.
Okay. Thank you so much, Shivangi, for joining us and giving us that perspective. We'll let you go on that note. Right. Conversations continue. We've got plenty of them lined up on the show today as well. But let's start off. We have Jinesh Gopani, founder of Taksh Asset Management, joining us this afternoon to give us perspective on everything that's happening with regard to markets, as well as how should one play it at this time. Jinesh, I'll allow you to answer that first. How are you playing this at this point?
Yeah, so thank you for having me on the show. I think volatile times, a lot to learn from what's going on in the global world. I think the best way to play is what we feel, at least given the global landscape is so volatile. I think best to play the domestic stories, B2C, where I would say that the oil, inflation, interest rate cut, all are, I would say, giving a lot of cushion to the domestic growth stories, at least for now. We'll have to see the second order impact, first order impact, any which ways. Even RBI governor has said that it is not much of an impact from this global tariff view. But the second order impact, which is an unintended consequences, will have to be very, very vigilant. And the best way to play is the domestic stories, B2C, B2B domestic, very, very stock specific, and less of exports.
And Jinesh, I wonder how one were to play domestics. Therefore, where do you see both value as well as some bit of insulation from everything that's happening globally?
See, it's a relative story. At the end of the day, money has to find ways into investment in some of the other sectors which are going to report, I would say, better numbers versus the other sectors. So B2C, if you take the financial as a space, if you take the consumption as a space, and especially on the backdrop of improving macro, at least for India for now, where crude oil prices have come down, interest rates are low, is under our control. I think, and also from the budget point of view, have got some bit of a tax rate benefits coming into play. So all these bodes well to play into some of the stories which I just alluded to. At least from a growth perspective, if the second order impact is not very significant, then I think if a company is growing at 20%, they might end up growing at 18%, but it is not a situation where some of these sectors will just collapse. So this is the best way I would say play. Even some of the companies which have moat in their businesses have high EBITDA margins to take care of this onslaught of slowdown, if at all it comes. I think they are much, much better placed. Our entire philosophy is based on execution stories, and we always feel that India is land of execution, and if a promoter or a professional is able to execute, then there is a lot of scope for some of these scalable sectors where those companies are. So that is the best way to, I would say, play your portfolio, and that is what we have been doing.
Jinesh, good afternoon. Neeraj here. In your earlier venture, when you manage seriously large sums of money, you were amongst the few who used to bet on stocks even at higher valuations if the growth was there and the promoter quality was strong. We started to see some bit of that come back a little before these tariffs have hit. Now my question is, in domestic facing stories, if the valuations are expensive, would you still go out and buy into some of those right now? Or is it a very, very bottom up, very, very stock specific approach that you're taking currently?
See, it's a very, very stock specific approach, Neeraj, because certain sectors, certain companies, as I said, if you are in some of these scalable sectors, sky is the limit for growth. So you can always envision beyond 3, 5, 7 years kind of a growth trajectory for that company. Obviously, the strategy should be executed well on ground. And if you are placing your bets on some of the good promoters, good professionals, whose intent and ability is good, the capability is there to grow and grow at a faster pace than the industry averages, generally the valuation premium comes into play. So obviously, valuation is a function of growth, the ability to generate incremental ROIs, and ability to have some moat in the business. So all this coming together, if you are in the right story, I think there is a lot of wealth creation also.
There is a mix happening, Jinesh, off late when I see the sell side notes. And a part of that mix is a flight to safety. There was a Macquarie note couple of days back, which said that, okay, they want to get into Airtel as a key flight of safety. This morning, suddenly people are saying that, okay, we want to get into companies which might be benefiting both from business doing well as well as lower energy prices, for example. So aviation is right in the thick of things, right? A lot of those technology players or the tech players, their valuations have gone down. So maybe there is comfort there too in the dealing rooms. Where is it that you have the highest overweight within your portfolios within some of the sectors that you spoke about?
Yeah, so as I said, we are playing largely more B2C as a theme, as global volatility is difficult to understand at this juncture. So better to play local, and that is where oil, inflation, interest rates are in your favor for domestic consumption stories to do well. So domestic B2C, more like financials, NBFCs, retail, consumption basket, is what the larger part of the portfolio is around. And also we have some positions in B2B, which is more domestic manufacturing and domestic selling, and exports have been less than 10% of the portfolio. So that is how we are placing our bets as of now. We will see how things unfold over next 1 to 3 month period. Also, the earning seasons is around the corner. So whether that gives you some indication of how to play some of the export stories. If let's say the concern is not that much, and there is a valuation framework which comes into play.
Yeah, Jinesh, the other piece is that there's you've spoken about how you favor domestic-facing companies. There's been this huge change of stance by the RBI and more action than really stance and commentary. On the action front, they've eased liquidity, they've cut rates by 50 basis points now. Do you believe that there is merit in buying financials at this point, given that you might see margins come under some pressure and more pressure to transmit rates to the consumer?
So I think if you really see the financial as a sector, if you need, let's say, 10% to 11% nominal GDP growth, which is like real GDP plus inflation, you will end up having an industry credit growth of at least 10 to 12%. So you already have a decent amount of sector growth which is available for you. In that, if a company has a market share of 1%, 2%, or 0.5%, be it NBFC or be it private sector banks, I think there is clear opportunity if you play your cards well. Margin, yes, when the interest rates come down, generally the deposit side gets repriced later, and then you have to reprice your assets faster. So to some extent, there will be some margin compression, but the growth is available for you to grow. And as you rightly said, the stance of RBI is for pro-growth. The kind of liquidity they have pumped into the system over last 3-4 month period itself gives you a lot of comfort that they are in for growth. They want to ensure enough liquidity for the growth to continue as they would have expected on the local economy side. So yeah, I think there is huge scope, even if there is, let's say, 20-30 basis point shave off of margin. I think it is transitory at some point, and overall you have to look at how the asset quality behaves. If asset quality is good, then the return on asset is a better metric to look for, and if return on asset is manageable within a certain targeted range, then I think there is a good play around that.
Okay. Jinesh, last couple of questions. The first one is, there was a lot of, this market meltdown has hit a lot of pockets, but I'm just using names as an example. But everybody was very constructive, let's say on a Voltas or the cooling solution companies, and that stock which was at 1800, maybe at 1200 or what have you, right? So a lot of fancied themes which are believed to be no-brainers. FMCG, 12,000 rupees in the hands of the consumer. So some of the discretionary and staple spend, both of them will rise. Tourism will rise, etc., etc., etc. It hasn't quite played out that way from a stock price perspective. Would you still believe in the veracity of the theme that 12,000 rupees with a consumer means discretionary spend could go up? A hot summer, which may mean that some of the cooling solution products could do well. Again, some of the ordering activity, quick commerce, etc. could do well. Do you still believe in that fundamentally?
Yeah, so as I said, Neeraj, that maybe there might not be the intensity of growth which is higher than last year, but at least there is a growth, right, at the end of the day. And obviously, one should not forget there is a lot of competitive intensity also at play. So just when we are doing our checks, I think clearly in the cooling solution side, there are close to 25-30 competitors when you go to the store and look at it. And the different geographies will have different brands, local brands, and also some of the national brands. So there is a lot of competitive intensity also at play. And to some extent, I think we are just the start of the summer season, and still it is early days to call for whether there will be a huge growth or whether there will be a sort of a sedate kind of a growth. But there is growth. So obviously, because of the high valuation, a lot of money chasing some of these stories, because we have got a lot of money in the mid and the small cap side from the fund flow perspective over last 2-year period. I think there is some shave off which is taking place. So too early to tell you whether it is the growth rates are good or not that great. But yeah, there will be competitive intensity which will play a role.
Got it. Okay, one last question from my end. When do you think this turns? Because it seems like a slightly long drawn battle. So would you believe there will be enough time to accumulate businesses over the course of the next 3 to 6 months? Again, I'm not asking you to tell me the timing of the market, but broadly, is that a safe thought?
Yeah, I think so. If you really see, Neeraj, what is happening is it is sort of a global supremacy game. So it is not that I am doing this, you come on table, and from next day onwards I will reverse everything. So I think it is going to be a bit of a long drawn process. It is like a global tariff war. We all know the war is between two large economies. Hopefully we should not be getting impacted so much. So it's a bit of a long drawn process. You will get enough opportunities in next 2 to 3 month period to understand who is getting impacted, who is not getting impacted, which sectors are better, which companies are stock specific will do well, how the unintended consequences will hit some of the companies or not hit some of the companies. So there are too many factors at play. Markets are going to be a bit volatile, maybe in the range of certain level, but they are going to be volatile. Money will pivot from some not so good stories to some good stories. So all these things will happen over next 1 to 2 to 3 month period. Along with that, you have an earnings season coming into play. So people would wait, investors would wait for some commentary coming out of from the corporate world. Especially people will look at tech and pharma sector, how they react to the commentaries and the results. And I think we can take an informed decision if you are looking at 3 to 5 year perspective.
Point taken, Jinesh. Thank you so much for coming in, speaking with us, and giving us that perspective. Uncertain times.
Pleasure. Thank you.
And always good having that perspective. But thank you so much. Anyway, we'll slip into a very short break. On the other side, we'll get you heard on the street, and we'll get you a top stock of the day, along with, of course, getting you more perspective from Manav Chopra, who will join us from Novama. Stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
We want to be the de facto platform for startups to accept payments. Out of 120 unicorns that India has, Razorpay powers almost 105 of them.
Then there is delivery. This stock has also been buzzing in trade. Dealers are indicating that there's a potential corporate development announcement, some acquisition announcement that the company could do when it comes to e-commerce express delivery space. So keep an eye out for delivery as well.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
All right, back with India Market Close right here on NDTV Profit. Now it's that time of the show wherein our colleague Somit Johnson with all the key chatter from the dealing room in our segment Heard on the Street. Somit, it's a busy holiday-filled next 10 days.
Yeah.
What are dealing rooms telling you?
Well, the first stock on the list is Varun Beverages. Now, what dealers are indicating is that there are buy flows on the FI desk when it comes to Varun Beverages. So the impact of competition from Campa Cola is expected to be low, and that's one of the main reasons why there has been some significant buy flows that are coming in when it comes to Varun Beverages. The second stock on the list is Aarti Industries. Large HNIs have been accumulating this counter at lower level is what the dealers are indicating. They're expecting earnings to be good, plus there is limited impact that could come in because of the Trump tariff is what the dealers are indicating for Aarti Industries. Third stock on the list is BSE. It has seen a strong recovery in trade today. Buy flows is what dealers are indicating when it comes to domestic institutional desk. As per dealers, they are saying that the volumes continue to remain high for BSE, which could despite the volatility that we have seen in the market, volumes are on the higher side. Trading volumes are on the higher side when it comes to, on the BSE exchange, and that's one of the reasons why we are seeing such kind of a move when it comes to the stock price. Muthoot Finance, now this is a positional buy trades done by large HNIs is what dealers are indicating. In fact, the stock was down 10% at one point of time. It's now down just 5.5%. Dealers are indicating that the impact of the RBI draft proposals on gold loans would be very limited on Muthoot Finance, and that's one of the reasons why HNIs have initiated a positional buy on Muthoot Finance. Divi's Lab, limited stocks in pharma are in fact in green, and Divi's Lab is standing out. It's just flat in fact in trade, where the despite the fact that the index is down 2% in trade, and dealers are expecting some positive brokerage note to come in on Divi's Lab. There could well be an upgrade that could come in from the MNC side on Divi's Lab. And lastly, it's GMR Airports. Dealers are indicating that a large mutual fund has been an active buyer on this counter, and that's the reason why the stock is up around 0.7% in trade today.
All right. Thanks for that, Somit. So some of those stocks in focus. But Somit, the other piece that's in focus is the administered price mechanism, also known as APM. Gas prices may actually fall, and if crude could sustain at current levels, how do you explain APM and what's the impact like?
Well, now actually everyone's talking about the price hikes that have been done by IGL and MGL, but this is something that we need to focus, because if crude prices continue to remain around the $60 to $62 per barrel level, then the APM gas prices could well be cut from May 2025. Now, what is APM? APM is the administered pricing mechanism that was done way back for the domestic gas pricing, and as per Kirit Parekh committee, they had recommended, or they had indicated that gas prices going forward would depend on how crude price movement is. And say suppose crude is at around $65 per barrel, then domestic gas prices would be 10% of the crude prices. So if crude is at $65 per barrel, then gas price, or the domestic gas price, that is the APM gas price, would be at around $6.5 per MMBTU. Now, given the current crude prices of around $60 to $61 per barrel, this suggests that the gas prices in May, if they continue to remain at current level, could come down to around $6.1 per MMBTU as compared to the current APM gas price, which is at around $6.75 per barrel. So this could lead to a significant cost savings for the city gas distribution companies. Now, the biggest beneficiary of this will be IGL and MGL, because they source nearly 50 to 52% of the gas, or they get nearly 50 to 52% of the gas from the APM market, and every $0.25 per MMBTU drop in the APM gas prices could increase the margins for IGL and MGL by around 0.6 rupees per SCM. Now, this 0.6 rupees is nearly 10% of the 9-month FY25 unit EBITDA earned by IGL, and around 6% of the 9-month FY25 unit EBITDA earned by MGL. Now, this reduction in cost that could happen from May 2025, coupled with the price hikes that the city gas distribution companies have taken of around 1 to 1.5 rupees per kg in the CNG segment, could lead to, or could be margin aggressive for both the companies in FY26. So keep an eye out for city gas distribution companies in trade. If crude prices continue to remain at the lower levels, there could well be a price cut from May 2025 on the gas side.
Okay, so gas stocks in focus on the back of that. Thank you so much for that perspective, Somit, breaking that down in detailed fashion. But Kush Bora joining us, founder kushbora.com, to talk to us about how he's viewing markets. Kush, good afternoon. What's your sense at this point? Markets relative to global markets are doing okay, Indian markets, I mean. How do you view the current move today, and what's the mood going to be like maybe on Friday and next week? What's your thought? What are the levels you're looking out for?
Sure. Hi, Harshas. Very good afternoon.
Good afternoon.
Well, I think this is a repeat of last Thursday when the Liberation Day, when the tariffs were announced, and we didn't react as much to the news as the rest of the world, but it only took a day for us to catch up. The reason that we didn't react on that very day is because it was expiry, and I think we're seeing weekly expiry. That is, we're seeing a repeat of that today. Also, it's the weekly expiry for the Nifty, and the muted reaction, I would suggest that could be attributed to some degree to that, which also then extends extending that logic, which also suggests that we could see an extended downward reaction towards whatever is happening. As I said, yesterday was perhaps a break day of that boxing match. The round 2 has perhaps begun now, so this volatility could persist with a serious negative bias. What happens in a market like this is that the upside remains capped, because everyone's on tenterhooks, and pressing the sell button is relatively easier than pressing the buy button, right? So everything will be on tenterhooks. For me, this is more of a consolidation with negative bias, or rather high volatility with negative bias. So even if I'm buying, I would stay light. That's the idea. You are looking at certain support levels in the interim, which is 22,300 and then 22,000. But Bank Nifty is one area where there could be a relative degree of comfort because of the fact that we've seen some of these stocks, PSUs and private banks, at least in the last few trading sessions, week or two, do well. Also, right now the PCR for Bank Nifty is approaching oversold territory, so there could be these interim bounces, so margin of safety is slightly higher. But yes, the bias remains negative, and high volatility in the coming days cannot be ruled out. The summary of all that could be stay light.
Point taken, Kush. Kush, your picks for this afternoon, therefore, how would you play it?
But still going on the long side because the action in the stocks, is pretty healthy, pretty encouraging. Certain sectors are starting to do well. I'll reiterate the call on Nazara Tech that we had yesterday. 960 was the initiation price, even though it's a little muted today. It's still above that initiation price. So 980, 1000 still remain your target. 940 is still intact as the stop loss. The other one is Max Financial Services. We discussed this stock about 3 sessions ago, and in that market volatility, the stop loss was triggered. But if you see the recovery on this has been equally sharp, it's back to those initiation levels of 1150, 1160 on the back of fairly good volumes. So the confidence is very high with Max Financial Services. It could be a positional trade. So for a target of 1210, 1260 with a stop loss again around the 1110 mark, this can be considered as a long trade. So Max Financial and Nazara Tech. Just a quick update. Yesterday we discussed Apollo Hospitals, and the first target on this one has been hit. So I would suggest if anyone's got a position in Apollo Hospitals, you should continue to hold on. 68.25 was the first target that's been hit. So also in the moves that we are seeing yesterday, today, a lot of hospital names like Aster DM, Rainbow Children, Krishna Institute, some of these are starting to do well. So I think within the healthcare space, we've discussed time and again how hospitals could be a safe bet, and for the moment, that's at least turning out to be true.
Some stocks which are making good moves, and Kush, just one more question to you on that. So one of them, let's say the intradays of Sharda Cropchem, I think there has been a nosedive, or I may be wrong, maybe it's a steady downtick, but I think there is it's at the lowest point of the day for sure. On the flip side, Mastech, quite contrary to what's happening in IT, 15% higher, and quite contrary to what's happening in the pocket that Jyoti Labs is in, or maybe you could argue FMCG is doing well, Jyoti has a bit of that flavor too, but about 9% higher for Jyoti Labs, so pretty strong show. So Kush, if I had to give you 3 stocks, you have to choose one of these 3 for a trade, which one would you choose?
I'd pick Jyoti Labs. The reason is, and you rightly said that, the FMCG space, which this has a flavor of, has actually done rather well over the last 2 to 3 sessions, especially since the tariff plans were announced. We had a buy call on Britannia. The second target on that one has been hit. Marico has actually started to pop up on our screeners and on our analysis. I think it will have that tailwind of the sector as well. Plus, if you see for the last month and a half, Jyoti Labs was consolidating within that 315 to about 345 range. Today's broken out of that on the back of very strong volume. So this kind of consolidation followed by such a big breakout is usually sustainable. I would bet on Jyoti Labs on the long side for targets of 395 once that is taken out, perhaps even a 415 as well. Stop loss comes in at the 355 mark. So while the 3 stocks that you've mentioned have had good moves, the one that instills confidence, on the chart is Jyoti Labs.
Okay, now, so that's, look at the trades for the day, for the month, for the near term. Now let's also try and focus on somebody who looks at slightly medium-term charts predominantly. Manav Chopra, Director Technical Analysis at Nuvama Institutional Equities, with us on the show as well. Manav, good having you. Thanks so much for joining in. Just what I asked you off air, I'm asking you on air too. If you had chart patterns in your mind, has the tariff tantrum convulsed those charts?
If you ask me things on the long-term perspective, to our thesis that we discussed last time, we still very much hold with the perspective that we are in that deployment zone. I think one thing to assess in the short term with a lot of this volatility, what has happened to the markets from 24,000 decline to 22, what has really, is there any red alerts or not? So to be very honest, when we look at the market internals data that we look through, the markets have fallen with improved breadth. Okay, that is one set that we cannot ignore. For instance, that the Nifty, the advanced decline ratio on the Nifty 50 charts, which were at the capitulation in the month of Feb when we had discussed, and now that number is far higher. So, if that data would have deteriorated massively, then it could have been one of the red flags, but that is not the case. Okay, if we go a little beyond than that, our previous market leader BFSI, which has actually held the fort for the markets in the month of Feb, massively in the month of March, where it has shown that leadership, what took the markets from 22 to 24, and in recent decline, actually, the structure has widened, with the participation of private banks and the NBFCs. Even, the PSU banks and the insurance spaces have managed to witness some cash-led buying, and that indices have formed a higher bottom. So, if you ask me, this recent decline was mainly because of the IT index and the auto-led, but the structure of the markets have actually not deteriorated. In fact, the market internals have improved. If I take you back in the month of, in the previous decline that happened in 2022, when the markets also declined, we saw a similar structure where the market were trying to base out. There was a global knee-jerk reaction that came in, and we did not decline on the poor market breadth. In fact, there were only select sectors or select frontline names which actually deteriorated. So we are at a similar structure. And in that case, that's why you're not seeing that markets really plunge below 22 or sustain below those levels. We are seeing those buying and that leadership sustain.
Very, very interesting. Manav, itching to ask you.
Yes.
The last time we spoke, you were bullish with regard to metals. You called 2025 the year of metals.
Right.
Still the case, because we've seen now a sizable correction, a decline, at least in the short term.
Right.
Do you believe that the opportunity now is only larger?
If you ask me, we are still back to the similar levels where it started. We are back again. And the thesis have not negated in that perspective. We are, our thoughts are still similar in the lines when we are looking into the medium term to long term scale. My basis assessment still holds that, when we are seeing the structural changes happen, where the Indian markets or the EMs, now if you remove the China part, the Indian markets have fairly outperformed the global peers, not only the India versus the emerging markets, not only India versus SPX, and the dollar index also coming to one of the scenarios. I think going forward...
Low beta as well, right?
Yeah.
Very low beta.
Yes, in fact, and within the high beta scenarios, we are seeing that shakeout which has actually played out. If we remove the noise, we have actually, I will not deny the fact that in the short term, the structure has weakened, but there is absolutely no fatigue in the long term structures at all.
For metals, you mean?
Yeah, absolutely for the metals and mainly for the front lines. I think it will take a bit of time for this sector to repair its volatility, and as the market settle down, we still hold the view that, will not be surprised to see Tata Steel over the period of long term will be testing its previous all-time high. So the thesis has not been negated, and we are still of that opinion.
Manav, I'm wondering if the underlying thesis through all of this and everything that we're speaking with everyone since morning has been that this too shall pass, that there is going to be some sanity which will return, and then the question becomes, where should you be poised for that turnaround?
Right.
In that context, let me come to you to the most beaten space today, which is pharma stocks.
Right.
It is on the basis of an offhand statement with no fact yet to it.
Right.
So if we are going back with this too shall pass, how well are pharma companies positioned, and in those, which ones do you think are best positioned?
Okay, so within the defensives, we have been quite categorical pushing FMCG over pharma. This has been our update since past few months.
Yeah.
And more so because, looking at this current volatility, we are not negative on pharma per se, but purely on the risk reward front and how the crude has actually played out. Our sense is that the FMCG would do better. But within the pharma, I think the scenario of the index largely being in a range of 10-15%, maybe some bouts of underperformance here or there, might play for a while. So, there are scenarios where in the longer term where certain sectors, after showing a massive multi-year rally, they might get into a sideways or a time-bound corrections with some bouts of underperformance. But that doesn't take away from any bearish biasness. Purely on the risk reward front, the kind of, at the fag end stage of how kind of a reversals we are seeing in FMCG, I think, that switch from pharma to FMCG is quite visible, and that might be a tactical for next 3 to 6 months is what our understanding remains in this scenario.
Something that we were talking about in the morning as well today, right? That somehow it seems that FMCG is turning out to be the point of hiding for a lot of companies, for sure. The other thing, Manav, is what happens to some of... So, okay, now does the best bet for you from here change? So if 3 months ago when we spoke, and rightfully so at that point of time, metals were the best bet, are metals still the best bet because they may have come down, and if the prospects are high from here, the gains might still be the best bet, or is the best bet some other sector?
Okay, so in conclusion, metals still remains one of the best bets on the long term, but along with that, the certain high beta pockets which we are going to assess in this market volatility, definitely which is likely to do better along with the other segments will be coming as a light, could be the PSU banks, which we are also looking into along with the cements. In the broader construct, the BFSI along with the cements, the infra, metals and energy as a sector along with FMCG, these are 4-5 key sector plays that we are quite bullish about. When we were just speaking about the FMCG, if you look at the energy as a sector, that has actually seen a 6 months of consecutive decline and is also at the fag end stage of the bear market or the completion of the bear market. What comes in the energy is your Reliance, your Power, your OMCs and your GAIL. These are the broader baskets which are also, we have witnessed a lot of selling exhaustion which have actually played out and which are showing some incremental positive impact. So when I'm looking at these parameters in general, yes, there will be a lot of juice not only in the high beta but also when select frontline names. So our positioning still stands on being more aggressive on the low beta front, but within the high beta pockets, yes, metals and certain other segments like cements and PSU banks are also equally well positioned in that perspective.
Understood. And how would you play realty? Because that one's also seen a sizable correction.
So in the high beta pockets, there are certain sectors which we are standing caution and we don't have any positive structures which are developing, which is real estate, your autos in general, along with your cap goods. These are certain high beta pockets which my sense is that it would actually will be sold into higher levels going forward. And for me, if I want to use this volatility for entry into the high betas, I would rather stick with the emerging sectors rather than the sectors which are over-owned and seeing some bit of selling pressure.
Would IT be in those sectors which are over-owned and selling pressure to max? I mean, we're speaking a day before the TCS numbers and market won't be able to react to it tomorrow. We'll react to it on Friday as well. Seems to have been written off a fair bit.
If you ask me, yes, IT has seen that massive underperformance. If we take the data of Fin Nifty versus IT, the Fin Nifty actually outperformed by 45% versus IT. The scenario is that maybe, I'm not very constructive on the IT in general. You might be at the fag end stage of the price pain, but doesn't account for a V-shaped recovery or it doesn't account for a massive outperformance. So the perspective for the leadership for me still remains on the BFSI, FMCG and energy as a basket, which would be supportive for the market. The only positive factor for the markets in general could be IT may not fall aggressively until unless certain environment, but that these are the reverse engineering which is more supportive for the markets in general. But for me to step in and going long in ITs, I might rather wait and watch for some more validation rather than being bullish at the
What about the index? I mean, this is the tricky one, right? Yes. No one knows what's happening with the index.
Right.
But since we are seeing, and I suspect you'll see a lot of policy moves, somewhat coming in from the governor. We are hearing from the depump secretary now, and we'll have those details out soon as well. So they're going to try and shore up. For the Nifty, do you think that it's time for the brave hearts to stick their neck out?
Yes, I think I would say more than brave hearts, this is the most opportune time in sense where, when I will also look at the global markets in general, right? When your, US S&P 500 VIX, it's above 50 levels. And last 35 years, this is the third time that it has crossed that. And usually, in that scenario, Indian market outperforming very strongly versus EMs, Indian markets outperforming versus emerging market. I'm not saying we are completely out of the woods, which was the case maybe a few weeks back. But with this global market and uncertainty and the kind of basing formations we are coming, my sense is this still stands as a strong deployment zone and we are still pushing for a strong deployment zone at this current levels. Given the fact for the Nifty, I think the first wall of worry that will start to improve once the Nifty starts to regain 23,000, I think that is where we will see some bit of a positive sentiment. But obviously in this whole scenario, won't be surprised to see when S&P 500 VIX is above 50, the volatility can be as fierce as 15% kind of a move, also like a rally, which could be one of the positive pushing factors for us. So I think we don't want to wait for that scenario to play out and then step in late, but take the early advances and maybe get more incremental bullish about 23.
That's amazing. So you are Braveheart right now. You are in the Braveheart category.
Yeah, but what's the downside to this? So you mentioned that there's a zone.
Yes.
So what's the downside to a zone?
23,000 on.
No, that's on the upside.
Huh.
Downside zone ka level kya hai?
Okay, so for me, we are around 22,000 has been one of our vocal, 22,000, 2200
so
has been one of our key scenarios for deployment.
And then thereafter, if that were to break,
so
what's the risk like?
Yeah, he's talking.
ये तेजी में आप मंदी में आ रहे हैं.
Trying to cover for risks.
ये deployment zone की बात कर रहे हैं.
So I would want to answer in a very different thought, right? If the markets were to break 22,000, what the key assessment would be, not looking things on a very one angle of like, Nifty in 22 has violated, now what? The point is which sectors and how those 22,000 has been violated. Like I said, in this decline from 22 to 24, there has been far more increased positive internals than the breakout. So if we see a blip below 22, how the global market is and how our sectoral leadership is, I think that will be the factor to look at. But at the moment when we do reverse engineering, I will not say that 22 is the ultimate lows, but we are somewhere closer to a very strong deployment levels.
Strong deployment levels. I think you can't have a stronger statement than that. Manav, thank you so much for joining us. I suppose the Bank Nifty is mirroring that as well. Let me get it in there since we spoke about the Nifty.
Yes, in fact, to tell you, financial Nifty is just 4% away from all-time highs. I mean, let's sum it up with some positive biases with that.
Yeah, why not? Why not? It's not TGIF quite, but yeah, we are on the eve of a mini break and we don't know what's going to happen in the next 48 hours. So on that note, thank you so much, Manav Chopra, for speaking with us. Always a pleasure and great to have you in the studios.
Thank you.
Focus though, of course, on IT as well, as that becomes the talk, right? TCS will report tomorrow. Is the first big one coming in with its Q4 numbers. What can we expect from TCS? Puneet, I suppose the biggest question is, can TCS give a guidance? Are they going to be in a position like any other IT company right now to even give a guidance?
Well, definitely, it's expected to be a low single digit, if any kind of guidance, and specifically on commentary as well. What is the current impact on demand? That's going to be one thing. But overall, in terms of results, revenues is expected to just rise 1.3% on a quarter-on-quarter basis. In terms of EBIT, it's expected to rise 3%, with the margins coming in at 24.9%. Now, that's a growth of 44 basis points. And currently, in this particular environment, I think that number will be looked at. The other aspect is the net profit, expected to rise 12%. Expect to rise 3%, beg your pardon, at 12,769 crores. Now, there will be some key highlights in this particular quarter. Of course, the first one is that USD revenue, the dollar revenue, is expected to decline because of the change in terms of currency and by cross-currency headwinds as well. The other aspect is that margins are expected to remain, in the range of 0 to 50 basis point flattish compared to the last quarter, and that is because of the BSNL tailwinds, because that deal is coming to its fag end. So the margins have largely been priced in as of now. And the other aspect is that the BFSI as well as the consumer vertical for the company is expected to drive the growth. So some commentary on that will be something to watch out for. They have mentioned that Kotak is expecting roughly deal wins of $11 billion, and that's down from roughly $13.2 billion that they reported in Q3. So something to watch out for on that aspects. The other key things to watch out for will be conversion of the deal pipeline, and as well as some commentary on the retail and manufacturing vertical, because most brokerages are anticipating some slowdown in the manufacturing vertical specifically. So that's one key thing. The other key thing will be, of course, outlook on the large deal ramp up, as well as some view on the financial space. And finally, if there has been any cancellations in projects in January or February as well, and what would be the FY26 guidance, which we rightly mentioned. So overall, it's expected to be a strong start in terms of a lot of things to watch out for in this term of in this particular results. So expected to come on a market holiday. That's the only concern.
Yeah, I don't know if it's a concern. Maybe we need a breather. Puneet will have to come on the market holiday to cover it. So
that is the concern.
That is the concern.
Can we show Puneet? Can we show Puneet?
I think he's logged off, preparing for the shift tomorrow. No, that's a lighter note, but
that nod says it all.
Nod says it all. All right, Kush Bora joining in, founder of kushbora.com. Kush, is it looking as bleak as it seems on the screen? Because it's a pretty bleak afternoon. I mean, if there is anything that we can take cheer from is that the downside has not been worse, isn't it?
It might just be a little bleaker than it is looking on the screen, Tamanna. And as I was just saying that, this is perhaps the expiry effect playing out where we've not, broken that 22,300, 22,250 support zone. It'll be interesting to see how we react to this on Friday. Let's just hope TCS has enough and more, in the numbers to help out, at least stem the fall. But honestly, if you ask me, it doesn't look like that. If I discount the results, at the moment, the stock is at a near 2-year low, and the 2950 3000 mark is somewhere where the support zone comes in. If that's broken, I think you're looking at much lower levels, perhaps 2700 as well. So I think you have to be a little cautious because IT is not participating. You are starting to hear some murmurs around. Okay, now this is going into deep oversold territories. Fundamental analysts will say value territories, but that's not happening. Just to come back to Nifty, I think the discussion that you were having with Manav was quite pertinent, where my number has been 21,500. If we do come to that level, or perhaps 21,000, 21,500, yes, that is a level where you'd want to perhaps bet the house kind of a level. So that's the long-term support zone for the Nifty. I won't be surprised at getting tested in this kind of volatility, but yes, we are certainly close to those long-term averages, long-term support levels, where deployment makes a lot of sense, and the downside risk from there on becomes very limited.
Bet the house number, Kush, that you spoke about?
21,500.
21,500. And on the upside, where do you see?
On the upside,
yeah.
On the upside, Tamanna, what will happen is that as long as we don't have complete clarity, you will see Nifty finding resistance at multiple levels. So to begin with, 22,850 and 23,000. That's the first zone of resistance that you'll find. Maybe slightly higher, it will be 23,400. So I think then you will be talking about very near-term resistances rather than a big number. The big daddy number for all of these is 24,000, where the 200-day moving average currently is. I mean, any break above 23,000 and then approaching that 24,000 mark will be a big win, obviously. But yeah, I would be looking at more near-term resistances in a market like this. And if I do carry long positions, I will actually be looking to book profits fairly regularly, because you never know, what the next headline will be, and what kind of downturn that will bring about.
Okay, we'll take a very quick break and we come back with more ideas for this closing session. Should you stay on the sidelines? Should you stick your neck out? Are there clear positions to take? BTST ideas, all of that when we return.
That's huge. That is a biggie. It's out of
Gold Plus Clear Glass. Far ho ya near, sab kuch dikhe clear.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You're painting a picture of a very typical geek. हम ही code बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
Those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120 unicorns that India has, Razorpay powers almost 105 of them.
when there is delivery, this stock has also been buzzing in trade. Dealers are indicating that there's a potential corporate development announcement, some acquisition announcement that the company could do when it comes to e-commerce express delivery space. So keep an eye out for delivery as well.
Welcome back. Last half hour of trade to go, and it's a tough afternoon. I mean, it's red on the screen. What else can I say? About below the 22,400 mark on the Nifty, but at least staying there. You've not seen losses deepen. It's been in that range after that sharp fall in the morning. Now, one of the stocks that are focus, or set of stocks that are in focus, is anyone who is giving gold loans. Our bull versus bear counter is not about gold loans, it's about gold. But I just want to talk very quickly about anyone giving gold loans because of this googly that came from the RBI governor. One line really in the whole policy speech where he speaks about new proposals to make the rules on the same playing field for banks and for gold loan companies. Look what happened to Kaplan. Muthoot's actually recovered from its worst of the day, but still, I mean, 6.5 points down. Kaplan also feeling the heat, CSB Bank, Federal Bank, IIFL, some of those which are really hurting today. Let's pull up the ones I'm mentioning, IIFL, CSB and all of those, and Kaplan as well. All right, but we're talking about Senco now, the focus over there on Senco, and Mahima is joining us to tell us about the bull and bear case. Let's start with the bull case since the stock seems to be on a high.
Right. So the bull case, first of all, with regards to the Q4 update, retail growth saw a 23% growth this particular quarter. That is not the case in the last quarter, of course. But overall, if we see, gold prices have significantly gone up. If we compare gold prices as per Q4 FY24, they are up 33%. And QOQ also gold prices are up around 11%. So with regards to that, the retail growth is less as compared to how the gold prices have actually moved. With regards to the same-store sales growth, where strong same-store sales growth this quarter of around 18%, which is better than what Titan has also done. Titan came at around 15%. But old gold exchange contributed around 40% to the overall sales is what the management committee is coming in. So that means that inventory selling was not much as to what was expected, 40% of sales being old gold exchange. So that might overall see some hangover on the profitability as well as margins. In terms of store additions, management had guided that they will open around 8 to 10 new stores in Q4, but overall, as per the Q4 business update, they've opened 4 new showrooms only in Q4. Next, in terms of diamond jewelry, that saw a significant growth of around 39% as compared to last year. So this is YOY growth, but studded ratio as compared to the overall sales for Senco Gold stands at around 10.9%, which is only slightly increased from that 10.5%, and this also constitutes of the lab-grown diamond sales that Senco Gold does through their Senes stores. Next, management expectations are that margins will improve on the back of increase in diamond jewelry sales or studded mix sales. But overall, we've seen a significant pressure in terms of 9 months FY25 margins. They stood at around 6% versus the guided range of 7 to 8%, and 8% has been the margin in FY24 as well for something like a Senco Gold. Lastly, in terms of stock performance, 1 month the stock has seen an uptick of 10%, but 6 months the stock has taken a significant hit of 55%. The stock is down around 59% from its 52-week high. In terms of FY26 outlook, management has said that they are very confident as to how FY26 will start with festive season coming in for something like Akshaya Tritiya will come in, and that will of course see an uptick in sales. They are set to open 20 to 22 new stores in FY26. They are expecting a growth of around 18% in Q1, and they are set to launch about 100 SIS outlets as well. In terms of what brokerages are anticipating, Antic has come out with a note saying that growth momentum will continue, and this will be fueled by favorable demand for something like a Senco Gold. They have maintained buy with a target price of 510. Return ratios to improve with an expansion of the franchisee-owned models, and lastly, they are expecting 27% PAT CAGR over FY25 to 27 estimates. So this is the overall view as to how Q4 has panned out for Senco Gold, and of course the bull versus bear case.
Well, thanks so much for that, Mahima. One of those stocks which is down 50% from the 52-week high and up 50% from its 52-week low. So even Steven on that count. But let me bring in Nirav Ashar, Head of Equity Research and at Latin Manharlal Securities. And Kushbura, of course, still with us. Let me come to you, Nirav, with regard to a fundamental view on this one. Pretty detailed breakdown in that sense. You know, the growth not really in tandem even with the kind of pricing that we've seen gold at. What's your sense? Is this a good number, bad number? How should one read it? And would you bet at all in a sector space like this one?
Yeah, good afternoon and thank you for the invite. Actually, looking at the quarterly updates which are coming from companies like Titan, Kalyan Jewellers, and now, of course, what we are talking about, Senco. I think the one important point which comes out is that the consumer sentiment is at best subdued at this point of time. It's just that the increase in the prices of gold are reflecting in the numbers, and we have demand which is coming in the form of a festival demand as well as wedding occasion demand. So it's basically driven by occasions. And if we were to look at the product mix or the breakup of the revenues, then I think it's been more the plain gold and the gold coins which have done well. And as you rightly pointed out, the gold exchange program has also done quite well. In the case of companies like Titan, the Golden Harvest scheme has also done quite well. In the case of Senco, the expectation was that there is going to be high ticket sales of jewelry, etc., which has not materialized, and the per ticket contribution is on the lower side. So they have very low ticket items which are being sold as compared to the larger players like Titan and Kalyan. So there's been disappointing on that front. Plus the gross contribution figure has been on the lower side. Hence, I think the disappointment in terms of margins and I think the burden of expectations playing out for the company. And I think on account of that, we are seeing a correction in the prices of the stock price.
No, so Nirav, just want to come to you on your gold loan companies, but before I do that, I want to play out what the RBI governor has said. In fact, Vishwanath Nair's piece is important, where he is talking about what are the top takeaways from what Governor Malhotra's announcements were today.
So just a little while ago, you saw Sanjay Malhotra, the RBI governor, address members of the press and take on questions across a varied number of topics. Of course, the most important of which was the rate cut itself and the RBI governor's comments and views on where the system liquidity stands. Now, here are 5 takeaways that NDTV Profit is pointing out, which are essential to understand where the RBI is. The first of which is that this is an accommodative stance, and that indicates that going ahead, if need be, the RBI and the MPC are ready to cut rates. Whatever the system might need, they will cut rates. The second most important thing that struck out to me personally was the fact that he said that RBI and the government will have a joint role in trying to support the economy in the midst of a lot of global economic uncertainty that exists. Remember that because of the global economic uncertainty and because of the tariff situation that is happening in the world right now, the RBI itself has downgraded its own growth projections for FY26 from 6.7% GDP growth projections for FY26 have been lowered to 6.5%. The RBI is admitting that there is going to be some amount of growth impact, and now the RBI governor is saying, of course, that there is going to be a joint effort by the government and the RBI to boost the economy for whatever needs there might be. The third most interesting thing that I found at the RBI press conference was specifically with regard to how banks need to ensure the transmission of these rate cuts happen soon. So between February and April now, the RBI has brought down its repo rate by 50 basis points, and those benefits have to be transmitted to the end consumer. Typically, transmission takes roughly about 2 quarters, that's 6 odd months, and obviously that's a very long runway, and the RBI governor is saying that obviously the RBI wants that the bank should transmit these rate cuts as soon as possible. That is why there's an accommodative stance. That is why liquidity has been maintained at surplus so that banks can lend faster and then ensure that the lower rates are passed on to the economy. And that's how transmission of these rates will happen. The fourth more important thing that I found was interesting in this RBI Monetary Policy press conference was his comments regarding what the bank should be doing to manage their business. Now, there was a question that NDTV Profit asked about CD ratios, because credit deposit ratio is something that the RBI has privately mentioned to banks that high credit deposit ratios are not appreciated, and that is why you saw a slower credit growth happening in the economy. Now that the RBI wants more transmission, obviously that credit flow into the economy has to go up, and we need to see whether the RBI is happy with the credit deposit ratio or not. According to the RBI governor, they are not actually targeting any number, but they want banks to ensure that their asset and liability balance remains in order so that their businesses can continue as normal. The last important thing that from this press conference that needs to be taken into account is the comments around certain bank issues that have come out in the last few couple of months. New India Cooperative Bank, you had IndusInd Bank, and you had AVM Housing Finance, three large, well, they're not really that large, but IndusInd Bank is a significantly large bank. Issues at these institutions have come up, and according to the RBI, they're not going to waste any crisis. In fact, they're going to use the learnings from these crises to ensure that supervision of the broader system remains tight. And those are the 5 things that you need to watch out for as far as the RBI's press conference is concerned.
All right. Now, some news coming in. Sources have told NDTV Profit that DIPAM officials will be meeting mutual fund leadership next week in Mumbai. What is on the agenda? Shrimi is joining in with more details. Shrimi.
Yeah, so the sources tells us that, the DIPAM officials are going to meet all the mutual funds, fund managers, in fact, next week in Bombay. And they are saying that, mutual fund is not providing strong guidance to investors, and they should, increase their exposure in public sector enterprises in their portfolios. However, the official underlined that, they have observed certain conflict between the fund leadership and strategy. So the statement is coming, amid this strong value creation strategies of CPSEs, where the DIPAM has recently pointed out that how PSUs have delivered record dividend in FY25. And despite PSUs making up only 10% of the overall market capitalization, they contribute 25% of the total dividend. In fact, they are emphasizing that investing in PSU stock could offer stable returns, make them attractive option for investors, senior citizen and minority shareholders. So what DIPAM is here saying that they should also treat CPSEs as the role model. And in fact, they are also saying that private companies to follow the suit by declaring fair dividends to their minority shareholder, ensuring more equitable practices across the market. So, in a nutshell, the officials are saying that it's basically the DIPAM is now going to guide fund managers towards more diversified portfolios and supporting the long-term financial well-being for each investor.
Okay, that's interesting. The push for interest in CPSE stocks is also something that should be noted because they've been out of favor for a while. Thank you so much for those details, Shrimi. Are we going to see that kind of shoring up from the policy end then becomes the key question? Nirav, I want to come to you on public owned or public sector owned stocks. I think they went out of flavor close to 7-8 months ago, if not more. But even among them, if I look at the rails today, there's a whole slew of cabinet outcomes which are coming in. If I look at the IRFCs, the IRCONs of the world, all of them, the RVNLs, are you seeing any opportunities there, Nirav? Anything you're liking, as you know that CapEx is going to get pushed?
Well, it's all a question of showing the right kind of image. Because if the hard work is being done, if the capex is being done by the government, then it needs to be projected in the right manner. So it's very important that there are periodic updates to the investing community on the progress of the reports, on the progress of the execution, what kind of orders have been won. And one very important factor is that there is severe under ownership as far as the PSU stocks are concerned. A large number of PSU stocks or stories are such where there is a lot of under ownership. So I think the efforts should be made to make the ownership of these stocks broad based and have a wide spectrum of investors, whether it is the mutual funds or whether it is the FIIs, to participate in a more meaningful way as far as these stocks are concerned. And of course, the dividend yield is quite attractive as far as the PSU stocks are concerned. But it's very important to articulate it in the right way, especially in the light of what we have seen in the last 7-8 months. We've seen sectors like defense and or railways performing quite well. But then there was a lull for a brief period, and now the order book has started picking up. So I think the government should not waste any opportunity and project things in the right way.
I just want to talk a bit about gold loans and what's happening there. So the RBI will be issuing comprehensive draft norms on gold norms, also prudential norms and related aspects that they will be looking into, and that is the space which has taken the hugest knock, isn't it? We're talking about Muthoot, Kaplan, etc. Just wondering, Nirav, if you think that it's a little overdone, because we don't know what these norms are, and some of these companies may already be following norms. I mean, the RBI has not made a secret about what they're not liking about the gold loan business, and we've seen action in the past as well.
Well, we've seen some action in the past. Some comments which have come regarding the LTV transparency and closing of the home loans, opening new home loans, gold loans without closing the older accounts. Some malpractices which have been highlighted in the past. But I think apart from this, the need to set the house in order and to make it more broad-based, I think that would be the idea of the regulator, that the gold loan business needs to be made more broad-based with more participants coming into the business, considering the fact that it is a highly collateralized kind of a portfolio which offers better safety. So I think the whole idea would be to encourage more banks to participate in this particular arena of business.
Encourage more banks to participate. I mean, why should they really? And Capri Global was what I was talking about. Kush, Muthoot, Manappuram, Capri, any opportunities you're seeing here, or you'd stay away till the dust clears?
So, Muthoot is something that I might just want to be a little cautious on. It's had a very smart recovery from the 200-day moving average, which was, way lower where, compared to where the stock is trading currently. But even before that, the stock was consolidating with a negative bias and, testing some of the key support zones. So that's one stock that I will be a little cautious on. But Manappuram is a different story. The stock was on a good run. For the last 2.5 months, the recent, correction that you've seen is more in line with markets, and that too on the back of very low volume. So I will not be surprised to see Manappuram rebound quite smartly from the levels it is, that it is at currently. So if someone does want to initiate a fresh long position, then yes, with the stop loss around the 215 mark for targets of 240 and perhaps even 255 kind of levels. Manappuram, I'm still quite favorable on, but I cannot let this pass without commenting on the smartest as well as the most amusing line that I've heard in a while, which Harsh mentioned about Senco Gold, a stock which is 50% down from its 52-week high and up from its 52-week low. While the maths of it is correct, I want to know if Harsh will have the same amount of enthusiasm if he had a similar stock in his portfolio. So, yeah.
Yeah, but I mean, it's a tricky one, right? So what would you do with it, Kush?
Okay. The recovery has been splendid. What I would do is I would hold on to this one if I had it from lower levels. You obviously can't buy it today. It's locked in upper circuit. But yes, the recovery right now is pretty healthy. If you do get a chance to buy it anywhere from the current levels up until the 330 levels, that should be a good buy, and hold it for targets of 400 and higher.
And Kush, your